Good morning, everybody. Welcome back to another episode of The Market Open. It is Thursday, December 12th, 8:46 a.m. Eastern Standard Time. And we've got some stuff to talk about today. Palantir got an upgrade to $70 by a new firm. We'll be talking about that. Tesla is above 420. We'll be talking about that. Donald Trump, president-elect, is going to be ringing the bell at the NASDAQ. We will be talking about that, or we'll actually be watching that live and see him ringing the bell. He has also been named Times Person of the Year for 2024. So that happened this morning as well. And we got some crappy macro data. And that's what we're going to start off with. Really, the data came in the past 15 minutes around jobless claims and PPI. And it's not good. And, my question is, how bad is it going to be in terms of the market's reaction? We're already seeing a little bit of the market not really love it. But this is definitely not in the right trend, because that trend we got from CPI, which was bad but not horrible. This one is, I would argue, a little bit more horrible based on some of the numbers that we're seeing. So let's start off with macro. We got to get into that, and then we will keep going from there with everything else that we have. Thank you, everybody, for being here today. We got a lot to talk about. Good morning to everybody. Jason, Philip, Gene, Jem, John, what's up? Christopher, Marie, Broccoli, Bob, Mario, Player One. The best part of these comments is when I'm like a minute or two late and I'm seeing everyone speculate on why I'm late, amid still sleeping, amid this, amid that. Those are that's the highlight of my day, seeing those couple of comment there. Jeremy, Merple, Sachin, what's up? Raul, Alex, Matthew, Francisco, Z-Stacker, Damien, good morning. Ruben, Vin, Taizuko, Damien. Thank you, everybody, for being here this morning. Richard, Pedro, Jonathan, Silas, Loop, Samir. Thank you, everybody, for being here this morning. We're all alive. We are alive on planet Earth, all of us. At this moment, right now, watching the stream, we are all actually living, breathing humans, which in and of itself is amazing, right? And that's what you tell yourself on a red day. On a red day, you tell yourself, you know what? We're alive, we're living, we're humans, we're breathing. That's good, and that's okay, because the red on the screen doesn't matter that much, because at least we're alive. PPI comes in way higher than expected, 3% on the PPI, above expectations of 2.6%. That's a big one. That's not CPI 2.7 to 2.6. That is a healthy 0.4% higher, from 2.6 to 3%. And then the core PPI rises to 3.4%, above expectations of 3.2%. You can see right there the S&P 500, as soon as that news came out, went down 0.25%. On top of that, we've got unemployment, which was not good for the past 6 weeks. Jobless claims came in lower than expected. Then last week it came in a little bit higher. We were like, okay. Today it came in much, much higher. 242,000 people in the United States of America filed for unemployment this past week, above expectations of 220,000. Now, I'm going to check the CME Fed futures probabilities with you right now, based on a miss, essentially, on the top and the bottom line. The top line being PPI, the bottom line being the jobless claims. And we are still at 98%, folks. In fact, I think we're a little bit higher than yesterday. We are still at 98%. So the December cut is all but inevitable. It is baked in. At least that's exactly kind of what the market's saying here with these probabilities. But 2025 cuts, I don't know how likely they are in January to start off with, if PPI and CPI continue to be a little stubborn. Now, there might be some external reasons why PPI is hotter than expected, and those things might be, you could argue, seasonal to an extent, and they'll go away over the next few months. But this could also be a little bit more of a trend, and I think that's what the market is struggling with right here. So Palantir down 1.3% on PPI. Tesla, which still holding above 420. It got up to 429 yesterday. 421.55, down about 0.77%. Robinhood down about 0.5%. We'll talk about Robinhood metrics later. They are nothing short of jaw-dropping, and they're pretty incredible. I checked my numbers yesterday on what I think Robinhood is going to do in Q4. I came to a number, and then I went to Seeking Alpha to see if the analysts had upgraded their projections, and they had pretty much upgraded their projections to my number. So that's letting me know that my analysis is correct on what Robinhood's Q4 revenue could look like, because the expectations went way up, and we'll talk about the expectations. I thought they would have like a massive beat, but now they're not going to have a massive beat because the expectations went up. The street always knows. The street always knows. But Robinhood right here down about 0.77%. Bitcoin 101,000. Bitcoin holding up. It was at 102, and then some of that CPI, PPI news came out and had a little bit of a red candle, but still green right here, up 0.28%. So Bitcoin is up. Google's down 1%. Royal Caribbean Cruises are down. Riot's up a little bit. SoFi down 1%. It was up 4.25% yesterday. Apple up a little bit in the pre-markets. Nvidia down 1.1%. AMD is down 0.23%. SMCI is up a little bit. Marathon's up 1%. ives down 0.4%. Coinbase is up 0.5%. And then Tesla right here down about 1%, 0.87% right here. S&P 500 down 0.23%. And the NASDAQ, which had a $20,000 close for the first time ever. So big tech really just had one of its best days yesterday. Down about 0.5% right now. Is this the biggest deal in the world when it comes to CPI or PPI? I don't think so, but definitely at a market trading at these multiples. Again, we are trading at 24 times a trailing 12 months earnings on the S&P 500. The historical average is 20. So we are well above that, 22 in a bull market. We're at 24. It's tough. Now, Tom Lee yesterday talked about the fact that we have to normalize trading at higher multiples. And, in 10 years, trading at 25, 26 times earnings for the S&P is not going to be that big of a deal. But right now, it does insinuate that it is a bit more expensive than what it's historically been. Archer is dropping by 6%. And you guys are saying in the chat because they are diluting. This is what happens when you're a sub $5 billion company. I kind of don't blame them. You have to, right? You have to raise money from somewhere. And if you have investors that believe in your mission, then they'll buy your stock and you'll raise some cash. So right here, Archer. Archer, first of all, is announcing a strategic partnership with Anduril. That's the news, to develop a hybrid VTOL military aircraft. That's actually really cool. Like a hybrid VTOL military aircraft with Anduril. Of course, Anduril getting this partnership from a hardware perspective with Archer makes a lot of sense, but the company is raising an additional $430 million in capital. So they're diluting by, let's just call it half a billion to make it easier. Market cap is $3 billion. So basically they're diluting, well, let's do the actual math. 430 divided by 3.14. They're diluting by 13%. It looks like 13%. Yeah, that's a decent amount of dilution. 13%. But, the Anduril partnership seems to be pretty cool, just like off first look. Don't have any details on it, but it looks cool. And you're going to need to raise money to be able to build that stuff. And so if you have a shareholder base that'll buy it, then there you go. That is what ends up happening. I wonder if the market really cares that much about it, if this gets eaten up as soon as the market opens. Obviously, dilution is never good, like in the short term, but then, people realize it doesn't really matter. Rocket Lab diluted last year. No one really cared after like a month. So we're going to see how the street reacts to that. But the headline news is PPI coming hotter than expected. Okay, so for those that are here, let's ask the question. Thank you, everybody, for being here. Matthew, thank you for becoming a channel member. I am not seeing any drones. I know in New Jersey, it's been reported that Iran has all these drones flying around. I don't see them. So I don't know. Maybe some other people are seeing them. I'm not seeing the Iranian drones. I don't know what the hell they're trying to do in New Jersey, but I guess they're doing whatever they're doing. Yeah, I haven't seen them. But here's my question to everybody. Are you nervous now about inflation? Because yesterday inflation went up, and I think myself and a decent amount of you were like, it's not that big of a deal. It's okay. We'll be fine. This number is actually a little concerning. Now, I don't think it's sell everything and get out of the market type of concerning, but it definitely is. Hold on. This thing's being stubborn. It is not leaving as easily as we thought it was going to leave. And I think that's something that at least we have to pay attention to from an inflation perspective. Will it be the biggest thing in the world? Probably not, but that definitely is something that matters. We got some people saying yes, some people saying no. It's not an alien. The government said it's from Iran. It's not an alien. It would be cool if it was an alien in New Jersey. That'd be cool. I'm not sure who to believe, but the government said it's Iran drones, not an alien. No, inflation is fine right now. A little. Sachin says Iran is not able to fly a drone to Israel with accuracy, and then they can get a mothership to fly a drone to the U.S. is the biggest horse shit I have ever heard. Well, then maybe it's a UFO. Maybe it's a UFO. As soon as they said it's Iran, I was like, okay, I don't care anymore. If it's Iran, it's not that big of a deal. If it's an alien, I actually want to see it. I want to check out what is this UFO. It's because it's obvious inflation will pick up in 2025. So many folks made crazy amounts of money in 2024. If crypto markets double in 2025, we will have a problem. Yeah, that's my biggest thing. I think that's my take on it. Look, I think inflation is going to be hard to get down unless the Fed uniquely maneuvers the ability to lower rates, but also incentivize an accurate form of supply and demand. So, for example, you need a lot more houses on the housing market to lower prices, but you need to lower rates in order to get the incentive for home builders to build those houses. That is a really tricky thing to navigate. I mean, that's not easy, right? And J-Powell already has done, I think, a pretty good job navigating over the past year or since 2013, so 18 months of really making inflation still get at least closer to 2% while keeping growth alive. But now you're getting into the nitty gritty part of it, right? That same metaphor of if you're 180 pounds, going to 150 is easy, but getting from 150 to 130 is a lot tougher. That's kind of the situation where we're in right now. And I don't know exactly how we're going to navigate it. Now, we're still going to do a rate cut because 2 countries today also engaged in the cutting of rates. We had, who cut rates? We had the ECB. So the European Central Bank, they cut rates by 25 bips. And then the Swiss National Bank surprised with a 50 basis cut. So the Swiss National Bank decided to cut, and then the ECB also decided to cut. They also just kind of dropped their restrictive language that they've been having. The Swiss National Bank lowered their 2025 inflation forecast to 0.3% from 0.6%. And GDP outlook for the ECB went to 1.1 versus 1.3, as we saw that kind of come down. So across the world, and Canada cut by 50 bips yesterday. That happened yesterday as well. Canada, they did some cutting, but that was yesterday, right? So we had Canada cutting yesterday. We had ECB cutting today. We had the Swiss National Bank cutting today. So you're getting cuts across the world. That's why, that's probably why the CME Fed Watch tool is not showing any change in terms of the probabilities for rate cuts right there at 98%, 97.9. But I do think going into 2025, even if we get our cut in December, we've definitely got to watch out for inflation, because it looks like it's a little stickier than what we thought. Do you think the Fed will pause? No, the Fed's not pausing. That's not happening. Not this time. Maybe in 2025, but it would be too much of a surprise to the markets. The Fed wants to do what the markets have priced in. They never really want to surprise the markets. And, remember, the Fed still cares about the labor market. And look, one of the pieces of data we got this morning probably insinuates that we're going to get a cut as well, because jobless claims came in at 242,000 versus 220,000. And when you have jobless claims beat by, that means 242,000 people said we are unemployed. The market thought it would only be 220,000. We are going to see that reflected in the private payrolls number next month on the first Friday of January. And that's when the Fed is going to have to say, well, we're doing what we're doing. We're doing at least everything we can to stop a recession, to stop people from being unemployed, which is by lowering rates. And, I think that's kind of what the Fed is thinking about right here. It's a question of how bad does inflation get for the Fed to be like, well, we are not going to cut rates, because cutting rates, even though it would help the labor market, would have inflation resurge to such a level that it is better if people lose their jobs than if we have inflation go higher. Now, a lot of people paradigmatically and philosophically, and for good reasons, are against that entire approach. But the Fed has done that before. They did that all through 2022, but we were adding a lot of jobs because we were kind of rebounding from COVID. And I think I think Jay Powell wouldn't hesitate to do it again if inflation really did get above 3%. But someone who would hate if that would happen, and someone who would probably try to fire Mr. Jerome Powell, is this guy. The Time Magazine 2024 Person of the Year, Donald Trump. He will be ringing the bell. We'll be watching that at 9:30 in 30 minutes. He would probably not like if Jay Powell didn't lower the rates. But now you're getting into a situation where inflation's kind of sticky. So, the battle between them going into 2025 is going to be interesting to see, because Trump has publicly stated he would fire Jay Powell. Jay Powell has fired back and said, you don't have the authority to do that. So I think we're good for December cut, but 2025 is where we have to figure out what happens from there. All right, that's what we got on inflation. And again, at 9:30, we will switch over to Trump and see him ring the bell here today. I think it is a little bit of an argument that if the president's ringing the bell, he has we've seen people say this many times, but he has an incentive to obviously keep the stock market higher. He has measured himself by the stock market. But even if he has that incentive, that doesn't change the fact that there are a lot of external things that Trump really can't control. And he's going to have to try to put all those things together, whether it's tariffs, inflation, interest rates, et cetera, and then ultimately earnings growth to get this market to go higher. We're definitely priced to go higher as per deregulation and all the other different things that people are bullish on because of Trump. But now we've actually got to execute on that in 2025. And a big part of that is seeing inflation go lower as well. All right, let's get into some individual names, and then we'll keep going from there. I think let's start off with Tesla. First of all, what an incredible day for Tesla yesterday. I think it was the one stock that had to be in the corner of your eye throughout the entire day because it was just incredible watching Tesla run. Tesla, at one point during the day, people don't believe this, but this did happen. At one point during the day, and I have a screenshot to prove it. At one point during the day, the high of Tesla was $420.69. It happened. It was a thing. It went down from 420.69. That's how it was captured as a high, right? Because if it went to 420.69 for like a second and then went to 420.70, it wouldn't be captured as the day's high. It went up there. It stayed there. And it got rejected at that level, came back down. It was really about 10, 15 minutes, and then it just went above 420.69. So there was a certain moment where it gave people enough time to get the screenshot, and it's pretty incredible that that happened. When Tesla was up at $420 a share by itself, the stock actually was up 69% year to date. And Elon commented on someone pointing this out, and he said, this is inevitable. So that was pretty cool to see in the context of Tesla. Now, some stats on what happened with Tesla stock yesterday and Elon Musk. First of all, Elon is now worth $447 billion. He is richer than Bill Gates and Jeff Bezos combined. Jeff Bezos is worth $249 billion. Bill Gates is worth $165 billion. One thing that's really funny, if Jeff Bezos never sold any of his Amazon stock, he would be the world's first trillionaire. So, and if he didn't get divorced, he would also be the world's first trillionaire. So if Bezos didn't sell or get divorced, he would be up there already, but it looks like Elon's going to have a chance to do it. Now, the total wealth that his companies have created, or total, I guess, shareholder value to an extent, of his private companies, SpaceX, XAI, Twitter, Neuralink, Boring Company, and then Tesla, which is the public one put together, 1.76 trillion. So you're talking about almost 2 trillion, which is like the market cap of Bitcoin right now, has been created by one man, Mr. Elon Musk. It's pretty wild, right? It's pretty freaking wild to see that that's actually happening. But that is a thing. And as a result, Tesla on one of the in a while, and that's getting some momentum. Oh, we got Trump talking at the bell. Here we go. Here we go. Here is Trump at the bell talking currently right now.
Of course, we keep entertaining with let the Bears be.
Well, thank you very much. President-elect. Tremendous honor. I brought some of our compatriots along with us. They're going to do a beautiful job for you for the next 4 years. And it's really been something very special. And I have to say, Time Magazine getting this honor for the second time. I think I like it better this time, actually. But we did a good job. We had a great first term, despite a lot of turmoil. Caused unnecessarily, but the media's tamed down a little bit. They're liking us much better now, I think. If they don't, we'll have to just take them on again, and we don't want to do that. But I do want to thank Time Magazine. I've been on the cover many times. I don't know who has the record, but I can only probably talk well about 25% of the covers. 25% are great. The others I just sort of hide. But it's been an honor, and every time it's an honor, I will tell you. And thank you very much for doing it. And thank the whole group at Time. Really very professional people. Thank you very much. And to Jeff and all of the people from the New York Stock Exchange. He knows how much I like it because many years ago, I bought a building across the street. I wasn't going to buy it. Then I said, you know, it's right next to the New York Stock Exchange. I'm going to buy it. We've had great success. 40 Wall Street, we've had tremendous success with it. But you've really had success with the New York Stock Exchange. It's an incredible group of people. And Jeff, you have done an incredible job, you and your group. And what a beautiful speech you made. Thank you very much. I was some introduction of all of us. But we've gone up since the election. I was just told by Scott, everybody said, you have to pick Scott Bessent. He has to be the one chosen for Treasury. Where is Scott? Let's see. He's around here someplace. He's around here. He told me we picked up $3 trillion since the election day. And I said, well, that's good. But what about before the election day? He said, we picked up some money there because they thought you were going to win. I said, I like this guy. He's going to be my Treasury Secretary. But it's true. It's. I think we're going to have a tremendous run. We have to straighten out some problems, some big problems in the world. It's when we left, we didn't have any of these problems. We didn't have Russia with Ukraine. We didn't have Israel October 7th. We didn't have the Afghanistan disaster. We didn't have inflation. We had no inflation, and we had a very strong economy. And we're going to do that again. But I think we're going to even up it because now we have experience that we didn't have. Now I know everybody. You know, when I first came in. We came down, Melania and I, a great first lady, who's very popular, by the way. She rang in. She rang in the bell. She rang in the bell. But we came down and we're driving down Pennsylvania Avenue, and it was so beautiful. I said, you know, I've never done this before. I didn't know anybody. I got to the Oval Office, and I'm picking all these big positions, and I didn't really know the people in Washington, but boy, did I get to learn fast. And now we do. And I think we have an incredible staff behind me and others that aren't here. And we're going to do a fantastic job. We're going to create the incentive theory again. In fact, I just announced yesterday, I didn't announce it for this reason, but anybody investing $1 billion or more gets a very expedited approval process because, you know, the approvals, when people come into the country, it takes them, in many cases, 14, 15, 16 years to get the approval. We have Lee is around here someplace. He's in charge of the environment, and that's Lee Zeldin, who ran an incredible race for governor in New York, was a very, very successful guy before that. He was a great congressman, and he's a fantastic lawyer. He's in charge of environmental, and we'll try and push him as much as possible to get those permits very quickly. Like a nuclear power plant, I would say a week would be enough time. What do you think? Is that okay? We're going to get fast approvals, and it's great that we have Lee and all of the people behind. They're all stars in their own way, but it is an honor, and this is a double because usually they don't coordinate the Man of the Year or the Person of the Year with the ringing of the bell. And brilliantly, you picked them both at the same time, and you were all friends, and you said, "Let's do it." And it takes one trip. It doesn't take two trips. That's okay. We like to save. We like to be able to do it properly, but this is a special group. So many friends in the audience too, John. Great job you've done at ABC. I'm really proud of you, and you've been so nice to me. Otherwise, I wouldn't actually acknowledge you at all. But you have been. That really is. It's a terrific job you've done. But again, I want to thank you. We're going down to ring the bell now, and I could just say that the economy, I believe, is going to be very strong. We do have to solve some problems. We have wars going on that we didn't have. We have a lot of things happening that we didn't have that would have never happened. They would have never happened, but now they have happened. And I want to get them solved. We have to get them solved because ultimately the power of weaponry today is the biggest threat we have, in my opinion. It's not some of the other things that you read about. It's the power of weaponry. The weapons are so powerful, so devastating. And I rebuilt our military. I got to know every one of them, including nuclear weapons. I hated to do it. Actually, I hated to do it. But we did some nuclear weapons that are so devastating and almost makes you very sad as you get them and as they come online. It makes you very sad because you know what the purpose of them is, and you just hope to God that you never have to use them. Because if you do, the world will never be the same. So we have to be very, very smart. We have to be very sharp. We have to be very special to do a job. And I think we'll get it done. And I think we're going to get a lot of people in the room. We've seen it. We were in France where President Macron did a fantastic job with the cathedral, an absolutely fantastic job of Notre Dame. And it was beautiful. The opening was the opening. And I just got back, and it was something really beautiful. And a lot of world leaders there. We had about 80 world leaders, different countries, and they were all coming together. They all wanted to meet us and meet me as representative of the U.S. And there was a lot of goodwill, but we're going to get some really tremendous goodwill. I was even thinking about inviting certain people to the inauguration, and some people said, wow, that's a little risky, isn't it? And I said, maybe it is. We'll see. We'll see what happens. But we like to take little chances, but that's not a bad chance. Here's a gentleman that's going to do a great job at HUD. Good luck, my friend, right? He's going to be a he's been my friend for a long time. It's nice to see you. I haven't shaken his hand yet. Come on. Congratulations. Really, you're going to be great. And Ben Carson is your biggest fan in the world. You know that. Ben has been with us for a long time and he's done a fantastic job. Thank you. Good. So, ladies and gentlemen, go on. We're going to put it straight. We're going to give tremendous incentive like no other country has. We're cutting your taxes. We're going to cut them very substantially. We got them down to 21% from probably 42 or 44%, depending on where you are. And we got them down to 21. Everyone said that was a miracle. Now we're getting them down to 15, but only if you make your product here. Otherwise, you pay 21, which is not bad. It's in the middle of the pack, but 15 brings you down to among the lowest. And for those that are running the big companies, those great, big, beautiful companies, nobody's going to be leaving us. You're going to be coming back. You're going to be bringing it back to the United States. We are incentivizing everybody to come back to the United States. We want you back here. Car manufacturers, everybody. And we have one product that nobody has really to the extent that we do. It's called oil and gas. There is no country in the world that has more. We're number one. I brought it to number one during my first term in terms of production. We're going to be number one plus. We'll do numbers that nobody will really see before. And when that happens, prices are going to start coming down because people can't afford their groceries, and they're going to be affording their groceries very soon. I tell the story about a woman an old woman, no money, went to a grocery store, had 3 apples. She put them down on the counter, and she looked, and she saw the price, and she said, "Would you excuse me?" And she walked one of the apples back to the refrigerator and came back to pay for the 2 apples. And she left with 2 apples. And the woman at the counter said that was so sad. And when I heard about the story, I said, that should never happen in America. And it's not going to happen in America. We're going to do it right. And we're going to take care of our people. And we're going to do things that nobody ever thought even were possible. But we're going to have an economy the likes of which nobody's ever seen before. And everybody's coming back to America. I saw that the other day at the cathedral. They're all saying, we want to come back. We want to come back. And with a couple of changes done by Howard and Scott and some of the great people up here with me, we're going to bring them all back. They're all coming back. So thank you very much. This is a great honor. And ringing the bell will be fantastic. And go out and get them. We're with you all the way. Thank you very much. Thank you.
All right, there you go. That was Donnie T basically saying this market's going higher. So 2 quotes from there. Number 1, he said, I quote, "I think we are going to go much higher with the exception that we resolve some of the outstanding problems that we have in the economy." Number 2, he said, hey, we're trying to lower taxes. And if you make your product in the United States, which again, I don't think is the worst idea in the world. If you act, because we have so much outsourcing of labor and manufacturing, if you actually do bring it back to the United States and you get a tax incentive, like, I don't think that's the worst idea. I think that's actually a really good idea. The question is, can they get it passed through Congress? Can they actually get the investments back in the United States? And if they do that, then hopefully we're bringing more jobs and products into the United States. Tesla right here down about 0.45%. Now the market actually pumped a little bit on that. We were down 0.5%. Now we're down 25 bips. At one point we were down 19 bips. So there was a little bit of buying maybe from what Trump was saying, but largely for those that are just joining, the problem is PPI came in, I would say much higher than expected. Market wanted 2.6. We came in at 3%. And then on core, market wanted 3.2. We came in at 3.4. That is not a slight beat to the upside. That is a pretty significant one. Now, it's not crazy, but it's up there. And that's why I think the markets are currently down right now in the pre-market as the market's trying to figure out, all right, is inflation back? Is it that big of a deal? Is it as sticky as we thought it was? And how we're going to resolve that. Rate cuts are probably not going to change. Again, Trump just touted how much pro-growth he wants to enable in the economy. So when you got rate cuts coming, at least in December, you got a lot of pro-growth, maybe some sticky inflation that might be temporarily sticky. I think you have a market that can still do well, but you definitely have a market that's going to have a little bit of volatility given inflation just showed us that it is stickier than what most people thought. So that's what we got in the context of the market. Chad says, every time you say bips, you sound like a mid-level manager at Amazon. Dude, how does this guy find a way to come up with these roasts? I don't get it. I don't get how he finds a way. I don't get how he finds a way. Bips is like, it's not that it's like more intellectual or anything. It's just, it's easier than saying 0.5% versus if you say bips. But I guess I do sound like a mid-level manager at Amazon when I say that. I guess I do. I never worked at Amazon, but maybe I can apply for being a mid-level manager. All right. So That's what we got in the context of Trump. You know, speaking of Chad, we might as well get into this segment right here. Palantir got upgraded by a new firm. Palantir got upgraded to $70 today by a new, it's not a new firm. It's been a firm that's been out there for a while, but it's a new upgrade for them. And they're initiating coverage on this firm. So I guess it's a new firm to Palantir. And it is $70 by Bard or Bayard. It's Bard, right? I think it's Bard. That I is a little confusing right there, but I'm pretty sure it's Bard. They are having a neutral price target or a neutral rating on Palantir. So they're not saying buy it. They're not saying sell it. They're saying, neutral, like, hey, we think it's a good idea at this level, which is 70. Now, Palantir is a little bit above 70, but that is their price target. Here's what they had to say. The positive on growth opportunity. Palantir is focused on providing AI firepower to Western institutions, supercharging data platforms for commercial enterprises and Western governments. Its AIP platform, launched in 2023, has catalyzed U.S. commercial growth, which surged 54% year over year in Q3, accelerating total revenue growth to 30%. Palantir has excelled at actually putting generative AI applications into production, which is where we expect the most value to be extracted in the coming years. We are positive on the company's position, but we are wary of chasing given strong year-to-date performance and valuation. How are you guys saying it? Bayard? Bayard? Oh, Bayard. Oh, that makes more sense. Like you're putting the air in the B and the D. Okay, Bayard. All right, so Bayard. That's what it is, not Bard, but Bayard. Now, what was interesting about this, and I think you guys are probably noticing it as I read this price target increase, is that they are talking not about the actual valuation at $70. They're not really giving a valuation metric to justify $70. Most of this price target increase is qualitative. Why is it qualitative? Well, it's qualitative, in my opinion, for the same reason that I've been pretty qualitative in my analysis on Palantir ever since we started really running. You can't really make sense of the numbers in a significant way because the numbers are tough to make sense of. Trading at 60 times revenue is tough, right? Revenues could increase a lot and it would still be trading at 40 times revenue, which is still pretty damn expensive. Most software companies at best trade at 15 times revenue. So you can't really use the numbers to justify Palantir. However, I actually think that's okay because at the end of the day, you want more analysts coming out and finding other justifications to give Palantir the premium. Because again, if the market's giving it a $70 price target, either the market is totally wrong, and some analysts might think that's the case, aka Rishi, Brent Thill, etc. Or you could be an analyst that says, no, I need to increase my price target, but I can't fundamentally rely on just the numbers to do that because there's other ways to analyze companies, right? And we've seen this with Tesla. I think most people did not think Tesla should get to a $1.3 trillion market cap. Tesla's gotten $550 billion of market cap since Trump got elected. Has anything changed in Tesla outside of, some improvements in FSD for $500 billion in market cap? Probably not. But if you valued it in just like that purely numerical way, you kind of miss what has been happening with Tesla. So from that perspective, I think it does kind of make sense how we're getting to this $70 price target. Now, what the other thing that's really important here, and reading from the price target increase, Palantir has excelled at actually putting generative AI applications into production, which is where we expect the most value to be extracted in the coming years. I think I went on like a 15-minute rant yesterday about why OpenAI has no moat on the market open, and we did a lot of comparison trying to figure out which, ironically, ChatGPT was down yesterday, and I was trying to use it, and I was like, damn, like I wish ChatGPT wasn't down. So, but like still, at the end of the day, I just went to Grok, right, when that happened. And although Grok's not as good as ChatGPT, which I said yesterday, it's not as good, it still got the job done, which led me to think, all right, do I really need to pay for ChatGPT, right? So if this analyst is saying, hey, all the actual enterprise applications that put generative AI in a meaningful way to derive an ROI for the business results, that is why we're bullish on Palantir, and that's why we're saying $70 is our price target. Well, I think a lot more banks are going to be saying the same thing. And that's why we have Palantir trending in these levels. Now, tomorrow is going to be a very important day, folks. Tomorrow, the NASDAQ is going to decide if Palantir gets into the NASDAQ 100 QQQ ETF. I don't think I'll be doing a market close. Well, I'm definitely not doing a market close tomorrow. I will be doing a market open. If it is announced in the morning, then we'll see it in the morning. If it's announced in the afternoon, then I won't be live for that. I think it's announced in the afternoon. I'm not fully sure. I'll try to find out. But I do think investors are going to get excited if we get into that ETF, and that might end up being bullish as well. Now, MicroStrategy is also projected to get into the ETF tomorrow. Bloomberg Intelligence says that MicroStrategy and Palantir have the best chance, and they estimated $2.1 billion worth of buying from institutional investors if MicroStrategy gets into the ETF. I don't know what the analysis is for if Palantir gets into the ETF in terms of how much buying there will be, but I would imagine there's going to be a decent amount of buying. And if that's the case, again, that could be a reason why Palantir goes up. And that will be happening on Jeremy's birthday. Shout out to Jeremy. Thank you for being in the chat. Happy early birthday to you. So hopefully you get an awesome birthday gift tomorrow of Palantir getting into the QQQ. Again, I really think Palantir is going to get in. I don't even think there's a question about it. MicroStrategy, I'm pretty sure, is going to get in as well. If one of those don't get in, that would be kind of weird. Like, usually the market knows. So I think they're both going to get in. And then it's just going to be a question of, how the stocks react to all that buying coming in as well. On top of that, we've got Dan Ives' top 10 Christmas list for the tech sector in 2025. So we'll start with Palantir and then we'll get into the other stuff because we're on the Palantir subject. So this is what he said at number 8. Palantir, the next Oracle. The climb begins. We believe the most underappreciated tech name in our universe still continues to be Palantir. And we predict 2025 will be another breakout year as its flagship AIP product transforms AI use cases within enterprises with the Messi of AI potentially the next Oracle. What's really exciting about that is he's arguing for a 2025 breakout for Palantir again. In this case, I think it would be in the context of growth. And if that growth can be substantial, 40-50%, then I also think that's going to be pretty damn bullish for Palantir, even if the premium is up there currently right now. Real quick, folks, before we get into the rest of his Christmas list, we have Cramer asking RFK a question. Let's just take a look at this real quick. I think it's like 30 seconds, and then we'll get back.
The nation about investing right now.
He's asking for cents right
Look,
there.
I think what we're going to see from President Trump is Wall Street can win and Main Street can win. I think we're getting Trump 1.0.
All right.
Everybody can do great.
Fair enough. And wow. Hey, guys. Hey, I haven't seen you since college, for heaven's sake. You're looking good. Hey, how are you? Look, I mean, are you just anti per se a GLP-1? You got to analyze it because I always remember you as an analytics person, not a person who's just gut.
That's a question.
Well, how do you feel about GLP-1 drugs? Do you think that they are net positive?
I think that the best thing is the first line of response should be lifestyle. It should be eating well, making sure that you don't get obese, and that those GLP drugs are, have a place.
Well, I find a lot of people want to put words in your mouth. A lot of people want to say, you know what, this guy is not in favor of all vaccines. That's just untrue.
Yeah, that's untrue.
Good. I wanted to know that because I think that I'm tired of people lying about you, okay? All right, chill.
What was the point of that, dude? That was just was that not awkward for other people either? That was just, I don't know, dude. If you're gonna ask such a specific question about GLP, you do that in a proper interview, not when the guy's like shaking hands with everybody because they just got it was weird, bro. That was so weird. But anyway, if we got anything from that, we got that Kennedy. Obviously, I mean, what we see his reaction is not a fan of GLP-1. He's more a fan of just like working out and being healthy, not taking drugs. And so, we're going to see over the next 4 years what impact that has, what impact that actually has on the broader market and some of these pharmaceutical names. I just want to check Eli Lilly real quick if there's any reaction from that. Nope, Eli Lilly's up. And then Hims, which was down 6% yesterday. Hims is down another 1.5% today, 29.71. Not too much of a reaction from that. Okay, cool. So yeah, that was awkward, right? You guys think that was awkward too? I was just so confused. I was like, I mean, if you have a chance to ask a question, I feel like you ask like a more macro question about like, why are you excited about the next administration, right? There's not the time to go super nitty gritty and get your like tagline so that you can make it into a headline. It's just like, that's what mainstream media tries to do, right? Because that's like how they operate. But that was a bit awkward. Okay, so going back to Dan Ives, his Christmas list. So that was the segment on Palantir. Again, Dan Ives thinks they can become the next Oracle. Dan Ives said a bunch of other things will happen next year, and that's why he's pretty excited for them as well. Number one is he says Tesla's going to $2 trillion, which someone give me the math on what share price that is, but I think that's 650. I might be wrong on this, but I think that's 650. So he thinks $2 trillion by the end of 2025. He thinks AI CapEx will exceed $1 trillion in 2025. He thinks the $4 trillion market cap club will include Apple, NVIDIA, and Microsoft. Apple, NVIDIA, and Microsoft. Riot is up right now as well. Riot is up 11% right here. Riot is up 12%. Not sure why Riot's up. We'll try to get that news in a second, but Riot, Bitcoin miner, is currently up 13% right now. He says tech stocks will compound another 25% in 2025. So he thinks the NASDAQ continues to go well. Tech M&A to be up 50%. He also thinks there's going to be a lot of new buying. There is a new company going IPO today called Service Titan. I don't know too much about them, but they're like software for contractors. Again, $7 billion market cap. Not sure if it's frothy, not sure if it's taking advantage of liquidity, but we'll take a look at that IPO and see kind of what that looks like. He also thinks tech antitrust headwinds will diminish. He thinks cybersecurity is going to go up 30% next year. He thinks the iPhone will be in a super cycle in 2025. And he expects Elon Musk will play a role in China tariff talks. And Jensen, Tim Cook, and Elon will get their companies outside of the tariff war that Trump is proposing with China in a way that excludes those big tech companies from having to deal with those ramifications, just like Tim Cook did back in 2018 when Apple got out of the trade war that China was in with the United States. All three of those companies do have, well, outside of NVIDIA, Apple and Tesla more so have significant business in China. So that's what Dan Ives is wishing for. And in 2025, we're going to see if that kind of plays out. Right here, up 11%. Let me see if there's any big news on Riot. Not sure why this one is up, unless they raised more money or something. Oh, wow. Starboard takes significant stake in Bitcoin miner Riot. Starboard is pushing Riot to convert some mining facilities to space for big data center users. Holy crap, dude. Space continues to get a bid, this time going to the Bitcoin miners. Starboard is pushing Riot to convert some mining facilities to space for big data center users, basically trying to infiltrate the value of their business when it comes to an energy perspective in training models for space, using the big data centers that these Bitcoin miners have created. Riot, Marathon, CleanSpark. One thing you can't deny about them, Iran as well, that has a significant moat when it comes to the energy space perspective, is that all of them have a ton of actual facilities that have use cases outside of just Bitcoin mining. And that could be a reason why these Bitcoin miners get more attractive outside of them doing the Bitcoin treasury strategy. Activist investor Starboard Value has built a significant position in Riot platforms and is urging the Bitcoin miner to convert some facilities into capacity for hyperscale data center users. Starboard's proposal follows trends seen at Core Scientific, which partnered with NVIDIA-backed CoreWeave to leverage its power infrastructure for AI-driven data computing. This comes as AI demand soars, driving the need for large-scale data centers. Riot CEO has previously signaled openness to such opportunities. Pretty incredible. Pretty incredible stuff. And that's what you got with Riot. Riot also just raised $500 million for the convertible note a couple days ago, or a week ago, and they just started buying Bitcoin with that. So you have Riot now buying Bitcoin and doing the convertible note and transitioning one of their mining facilities into something to use for space. Here's Trump. He is at the bell. We have about a minute left. He's about to ring it right here. And here we go. Let's see what they do.
Chewy had big insider selling with the 10% buyback of the sale.
Okay. There he is.
It's being to see. I want people to keep an eye on.
I will do my cowbell after.
By the way, a little history for the president-elect. This is not his first time in the building by a long shot. He was here actually for the listing of Trump hotels back in 1995. He shot some elements of The Apprentice in this building, Jim, back in 2004.
Well, when I was a judge on The Apprentice, we spent a lot of time talking about the stock market. And I enjoyed my time as a judge. He is so involved with trying to understand wealth creation. That's what we talked about off camera. And I know that there's obviously non-disclosure.
20 seconds.
Being an apprentice judge. But the man is fascinated by the stock market. As fascinated as the current president is not.
He is no longer just a TV star. He's the incoming leader of the free world. He's going to ring the bell here in about 20 seconds. An historic moment at the New York Stock Exchange as we get this opening bell rung by the president-elect, Donald Trump.
There it is. There it is.
We're going to take.
All right, that's it. There you go. Trump rang the bell, And now I will ring my bell. The stock market is now, let me just pull this up, open. Wake your ass up. Here we go. Riot is up 12% as we get into the market open. Okay, I was definitely reading that press release wrong. It's not about space mining. It's about converting the data, the Bitcoin mining space into data mining space, or into big data center big data center space for a hyperscaler. So I saw space and I thought like going to the moon. That's not the case. So Starboard is taking an activist stake in Riot and trying to get them to take some of their Bitcoin mining space, like regular space, not like actual space, and then turn that into data center space. So that's what they want them to do. Very similar to IREN. You got Riot right here, up 10% on the day. Currently right now, Palantir up about 1%, 73.18, up 1.12% on the day, 73.32. So Palantir's up, HIMS is up 2.35%, Eli Lilly's up 0.09%, Robinhood down 2.25%. So we got a little bit of a decline right here. I think we got to 35.62 at one point. So we were down about 4%. Robinhood right here down now 1.82%. Look, those November metrics were amazing. We'll talk about the metrics in a second. This sell-off right here could be algorithmic. It could be insiders taking some profits, which is normal. It could be just regular people taking some profits after going up about 200% over the past year. So nothing too crazy there, but I think consolidation in this 35 to 38 range is pretty normal for Robinhood. Robinhood right here down about 1.12%. Tesla down 0.25%, 423.65. So Tesla as well down a little bit. Oh, Tesla just went green. There you go. So Tesla not really holding on to that red for too long. Very slightly red right here as the market opens. Google is down about 0.48%. MicroStrategy is down 0.34%. Bitcoin still 101,000. Meta 628. Now everything went up yesterday. Yesterday was a historic day for the stock market. The Nasdaq closed over 20,000 for the first time. So it makes sense to see a little bit of a pullback today, given there was so much green yesterday. So I would expect, markets to struggle a little bit here today. But yesterday was a better day for most of the Max 7 pretty much all year. Apple right here, 246, SoFi, 1595. SoFi goes green, Amazon, 229. That's down about 30 bips. NASDAQ just below 20,000, 19,952. Microsoft is green, 452. Microsoft's actually up 1% right here, continuing its run from yesterday when it was up 1.12%. Meta, 628. Bitcoin, 101. MicroStrategy just went green. Adobe getting kicked. Adobe down 10.3%. We were watching the interview of the Adobe CEO live on the market close yesterday. It was not good. It was not good. It sounded like a YouTube tutorial on how to use Adobe. It really was not that good. Guidance was lower than expected. They did beat on the top and the bottom line, but market kind of struggling to see the long-term growth of Adobe, especially in the AI space. So Adobe right here down about 11%. Palantir 74.15, a little bit of a potential pre-NASDAQ inclusion pump that we're seeing on Palantir. We were at 82 on Monday, now down to 74, but it is up 2.5% of the day. The dip this week was $68.07. So it was, slightly down below 70. But 74.30 is where we're at right now. Archer is doing dilution by $430 million. They're down by 5.5%. They're also partnering with Anduril. S&P 500 down about 0.24%. For those that are just joining, the PPI did come in hotter than expected at 3% versus 2.6%. And that's why we had a little bit of weakness in the markets in the pre-market. And we're kind of seeing that right now as we get into the market open. Robinhood right here, 37.44. So again, you did have a little bit of a red candle as soon as the market opened, down almost 5%. And now you're recovering right here up 1.2%. So buyers stepped in around that 35, 36 level and immediately bought the dip. UNH continues to struggle. United Health Group, that's down 1.1%. China giving up pretty much everything that it got this week. Again, just hard to trust China. They did unveil some new stimulus today, but the stimulus is not enough to deal with some of the broken parts of their economy. So as of now, China currently flat on the week. Broadcom earnings this week. That's going to be very important. Broadcom down about 2.17% today. They had a big partnership with Apple yesterday. That's why they were up 5%. So today after the bell, we will be looking at Broadcom's earnings. They're the 12th most valuable company on the planet. So we'll be taking a look at them. Palantir 73.85. Where is SoFi? SoFi is 16.20. SoFi breaking above that 1550 level that it was at after it got downgraded from Bank of America. Upstart is up today. Upstart is up 5% as well. Upstart getting some love. Palantir 74.05. S&P 606. Uber got smacked yesterday, down about 7%. Uber's up 3.15%. So market's kind of realizing, hey, maybe it doesn't make sense to sell off a company just because of FSD, but that's really what has been happening with Uber. Uber right here up 3%, still down pretty significantly from the highs of this year, and now it's barely up year to date. Tesla stock is red, 421 on Tesla. I don't think it should surprise anyone if Tesla goes red today. It was up a good 8% yesterday. Makes sense for Tesla to take a breather, but if we hold above 400, really 415, then I think that would be a good thing for Tessie. Riot, again, the activist investor Starboard is asking Riot to take some of their Bitcoin mining space and turn it into large-scale hyperscaler data center space. Same thing that Iren, another Bitcoin miner, has done. That's why the stock is up 8%. Look, if the Riot CEO is down to do that, and they're down to give some of that space to the hyperscalers because data centers have so much demand and so little space to actually be able to do their data mining or their data, their training, their inference training, all the stuff that happens in these data centers when it comes to GPUs, then I think that's a great vertical for Riot. And that plus the convertible note they issued on buying $500 million worth of Bitcoin, it makes sense. I mean, it's diversifying the business just from Bitcoin mining, which I think is a good thing at the end of the day for all of these Bitcoin miners. Palantir right here, 74.50, up 2.7% on the day. That's up. Yeah, Riot CEO was on TJ's show yesterday. TJ will be joining in about 20 minutes. We're going to do our segment on options today because we're not going to be able to do it tomorrow. So he'll be here today, and we'll go through the option tracker. He'll kind of give us a little tutorial on how to use it. And so about 25, 30 minutes, TJ will be on the show today as well. Bitcoin getting a little hit below 101, 100,694 right now. SoFi still moving. Grinder, 1592. You got Grinder moving up. SoFi, wow, 1635. Not bad. If you bought the dip in that low 15 range on Bank of America, you're not doing too bad right here. You're not doing too bad. Palantir as well, 74.55. Palantir continuing to gain its momentum right here. 1635 on SoFi. AMD is up a little bit. 131 down from or up from the 128 lows of yesterday. So AMD getting a little bit of love. The Qs still down 0.5%. S&P down about 0.25. I mean, I like that the Qs and the S&P are only down what they're down right now because, again, that PPI reading was pretty nasty. And jobless claims as well, for those that are joining, came in at 20,000 more than expected, 242,000 versus 220,000. So you did have some really crappy macro data. You had Trump kind of maybe changing sentiments as he rang the bell and said that we're going to take the stock market much higher. Again, he measures himself through the success of the stock market, but that inflation data was not good. That was not the best. Reddit, is Reddit moving? Dude, I don't know what's moving Reddit, but Reddit's moving. It's up 400% year to date. It's not slowing down. Again, the covered call premiums on the stock are absolutely amazing. They were profitable last quarter. They're probably going to continue to be profitable. I don't think there's anything that special about Reddit other than they're profitable and they're growing. But I don't think it's like, they have a moat. I just don't think the moat is like that crazy to drive shares up 400% outside of people thinking that they're going to really grow a lot and $30 billion is pretty cheap. And I think that's what people are thinking right here for Reddit at 171, up 3.59% on the day. Archer did partner with Anduril. We talked about that today. Look, that's good. That's good news. Archer right here down 3.7%. It was down 7%. So recovering a little bit from that decline. We're seeing Anduril in all these different verticals when it comes to hardware. They're going to be making a military VTOL. So that's going to be pretty cool when that collaboration does come out, but they need to raise money for that. So they had to dilute by $400 million. If you're diluting to build some really cool stuff, I think shareholders can overlook that. And that's why Archer recovering right here from 8% down to 3% down. Riot is now up 9%. Riot is up 9%. Amit, what do you think of Open? You know, good question. I actually did some due diligence on Open on Saturday night. Ironically, I was talking about Open with Steve, and we were kind of looking at it, trying to see if there's anything there. The biggest problem with Open Door, so the biggest moat or the biggest bull case for Open Door is that next year the Fed's going to lower rates significantly. That's the projection, right? 4 or 5 cuts, hopefully. And the spread between the 10-year and the mortgage rate should significantly decrease. And that means mortgage rates hopefully come down to 5%, 5.5%. That would create a ton of buying, and all of that buying would be really good for Open Door because they buy and sell houses. The problem is if you look at Open Door's margins, they can't make a profit. And in 2021, they sold, I think, like 16 billion or 20 billion worth of houses. And they, I think, made like $200 million of net income. So Open Door's business is just really tough, even if there's a good environment for buying and selling houses, because it's a very low margin business and they haven't figured out how to diversify the business to create more margins. And so I think Open Door can do well just based on sentiment on the real estate market changing next year. I don't know if the actual profitability is going to be enough to get people excited, but half of the company is trading at cash, $1.49 billion market cap, and they have about 700 million in cash. So I can understand why people are excited to take a gamble on it. Uber right here, 62.93. That's up 2.94%. CrowdStrike 363. Google 194. Roblox at $60.39. Meta at 629. Where is Tesla? Is Tesla still down? Tesla is down 418. All the Mac 7 should be down except Microsoft. Not sure why Microsoft's up, but all the rest of them are down. All of them had a really good day yesterday. This is pretty normal for them to take a breather, and that's why we're seeing them down. NVIDIA goes down 1.79%. I don't know why NVIDIA is down that much. NVIDIA was also getting hit yesterday, but NVIDIA, I think the market's kind of just waiting until Q4 earnings for NVIDIA, because at this point, they just really want to see the growth. And that's the problem. NVIDIA, guided lower than what the growth would look like. RGTI is down 5%. Riggedy Computing, all right, that one's down 5%. It was up, I think, like 40% yesterday, so that was a good one. That one is down. The miners are giving up all their gains. Let's go to the crypto stocks. Robinhood basically getting back to neutral. So I don't know what caused that massive flush. Do you guys see that chart? And then we'll go over Robinhood metrics in a second. It went to 35.62 at 9:35, and then it just bounced all the way up to 37.79. I don't know what caused that flush, but something caused it. And whoever got that dip, if you somehow got it, congrats. But that was a very short-lived dip. Robinhood looking like it's about to go green. Marathon up 1%. Riot's up 6%. Yeah, Riot's giving back some of its gains. Bitcoin's still 101. I don't know why the miners are going down on this. Bitcoin's going up. CleanSpark's up 2%. Coinbase is at 320. That's up 1.9%. MicroStrategy down from yesterday. It was up a lot yesterday. Now down about 1%. Cypher's up a little bit. Iren's up a little bit. BitX is slightly down 64.32. Grab. Where is Grab? Grab is down 1%. Good. We need Grab to go back to 490. We need Grab to go back to 490. One of the reasons Robinhood was down yesterday is one of the co-founders sold 230,000 shares. I don't know how much of his stake that is. I still think the dude owns like 50 million shares, if I'm not wrong. So 230,000 shares is not a ton of shares, but he is starting a new company in space. So that's probably why, he's selling, taking some profits. But again, the Robinhood metrics were just insanity. And we'll talk about that in a second. Those metrics alone, make me want to buy the dip. It's one of those things where this Q4 is going to be pretty exciting. And we'll talk about the numbers for what it looks like. It's like 0.5% of his equity. Yeah, it's not a lot. But it was some sell side pressure, but 230,000 shares is not crazy, So the CFO also sold 150,000 shares a couple days ago. I mean, look, the stock's up 200%. These guys deserve it. The CFO's been there since 2018. So he's been there through, hell and back. And so it makes sense that they are taking some profits here. When is Anduril IPOing? Palmer Luckey did say it's happening soon. He said it's happening soon. So maybe we will see that happening. But so far, we don't know. Okay, couple pieces of Bitcoin news. So 2 headlines on Bitcoin that we have today. Australia's pension fund, AMP, bought $27 million of Bitcoin to become the nation's first major pension fund to buy the asset. So you are seeing other institutions that manage tons of money across the world say, we're going to take a gander at this Bitcoin thing. Australia now being the next one to do that. Another piece of news, spot Bitcoin ETFs now hold over 500,000 Bitcoin. 500,000 Bitcoin. So you got the spot Bitcoin ETFs that hold a decent amount of Bitcoin right here. And that sell side or that buy side pressure on Bitcoin every single day continues to be good. If we look at the analytics from yesterday, you saw Fidelity bought $121 million of Bitcoin. ARK bought about 50 million. Bitwise bought 12 million. You got a lot of positive inflows going in with these Bitcoin ETFs. Speaking of ARK, Cathie Wood did sell 50,000 shares of Tesla yesterday. Makes sense because Tesla went up. She's probably rebalancing. She also sold 200,000 shares of Rocket Lab. So Rocket Lab, she's been trimming for a while now. Not sure why, but she was trimming it at like 12, 13 bucks. Robinhood right here, 37.84 going green. And Tesla, it probably makes sense that she's selling Tesla because it went up a lot. Tesla right here down about 1.5%, 418. Tesla, I think she has a $2 billion stake in the company now based on Tesla running. It's still the number 1 position in RKK. But she did sell some Tesla yesterday as well. Adobe's really getting smacked, dude. Adobe right here down 12%. I would imagine the earnings call went as badly as the CNBC interview as soon as the numbers came out. Like it was not good. It was not good. And again, I don't think the numbers were that bad. I just think they kind of suck at communicating. This is the 3rd time in a row that this has happened for Adobe. We covered Adobe back in January on the earnings call, and like it was so hard to listen to the call. CEO was also kind of condescending in certain areas. Like it was just kind of it's not a thing that's being loved by the generative AI part of Wall Street because they're not really showing their generative AI mode. AMD's up 1.5%. SoFi, wow, 1647. Holy crap, who is buying SoFi today? SoFi options are up 385%. We are still on the journey to turn 3,000 into 50,000 if SoFi can get to $20. That is the goal. SoFi options still doing well right here. 1640. Not sure who's buying SoFi. Might be some big boys who think it's cheap, or it might be retail coming in, or it might be some shorts that are covering. We did see the short float go down from 148 million shares shorted to 135 million shares. So 12 million shares were given back to the market as these shorts covered. Palantir right here at 73.61. Grab at 536. MicroStrategy at 406. And Upstart is also green. Not sure why Upstart's green, but that's up another 8% on the day. ELF is dropping on bad news. ELF is down 3.5%. Okay, so let's take a look. Let's see what's going on. Also, is there a SoFi partnership at all? Is there a SoFi partnership? No, I don't know. There is. SoFi partners with Mesh Payments as a sponsor bank. Okay, so that's the partnership that the stock is moving on right now. That's the partnership that the stock is moving on right now. ELF, let's take a look at ELF. We'll go to that partnership in a second. Then we'll go over the Robinhood metrics. ELF right here. No news on ELF. I don't see any big headlines right here on ELF. Not sure why it's going down 3%, but yeah, it looks a little bit more technical. It doesn't look like any big news on ELF right now. In terms of SoFi, so this is the news. Mesh Payments, an innovator in the global travel and expense management, has joined forces with SoFi Bank and its sponsor bank and with Galileo, a leading fintech company owned by SoFi as its longtime payment processor. This partnership integrates Mesh Payments' next-generation expense and card infrastructure with SoFi's bank scalable financial framework and Galileo's modern, customizable API-based payments processing platform. Okay, the reason SoFi's up is because this is a tech deal. This is a tech deal, folks. We got another tech deal. That is why SoFi is up. Let me check the sell wall at 17 and see how far resistance is. But if Noto keeps dropping more of these deals, SoFi is going much higher. We don't need any more lending stuff. We don't need loan originations. We don't need, oh, you can buy SpaceX. Like, no, we don't need that. We need tech deals. 17 has 125,000 shares. 125,000 shares. You get through those 125,000 shares, we are going to see 17 on SoFi. By uniting these capabilities within a single ecosystem, Mesh Payments is positioned to streamline enterprise expense management, reduce inefficiencies, and deliver innovative solutions to its clients more quickly. That is music to my ears. More tech deals, more tech partnerships. SoFi is going to get a better hybrid multiple. That's it. That's all they need. Really, that's all they need to do. That if they do that, they change every part of the narrative when it comes to SoFi. Because now it's not just the bank. You don't just look to fair value accounting. You don't just look to tangible book value. You look at SaaS premiums. And we've seen companies that execute well, that can get reoccurring revenues. They get a nice premium in the market. So that's what I think most importantly will be good for SoFi. ELF got downgraded by Deutsche Bank. Okay, so that's why they're down today. So it wasn't any fundamental news. It was a downgrade. And that's why ELF right now currently 3.78%. Why is down? Cramer Trump interview is right now. Okay, let's go to that. Cramer Trump. Oh, no, Bill Ackman's up. Okay. Oh, no, Cramer was with Trump. Okay, let me go to that. Cramer was, oh, yeah, he did interview Trump. Okay, let me go to that real quick, and then we'll go to Bill Ackman, who's on CNBC right now. Here we go. Here we go.
Absolutely. What do you have to say to the American investor in this country?
Well, I think you're going to see some very good days ahead. A lot of incentives are going to be given. You saw yesterday a $1 billion investment that we give you very fast approvals. Nobody's come up with that one yet, although it seems pretty simple. I think you're going to have some great days ahead. We have to conclude a couple of bad wars that are going on. A lot of bad things are going on, but we'll get them done.
Do you think that we are in a situation where business will be far more embraced under you than currently?
Well, I don't want to really knock current, but I will tell you more than at any time, anywhere in the history of our country.
Now, we used to speak together about the idea that the averages mattered and were a good barometer of your performance. Is that still the case? Can we go beyond Dow Jones, maybe to NASDAQ?
Well, I think I've always said, to me, stock market is all of it, all of it together. It's very important. It's an honor to be here at New York Stock Exchange. I sort of joked that I actually bought the building across the street because the stock exchange was here. It's a big deal.
40, it's a nice building.
40 Wall Street. So, look, we're gonna do things I think that haven't been really done before. We're gonna be cutting taxes still further. As you know, we got it down to 21%. We're gonna bring it down even below that. You pay 21 if you don't build here, and meaning your product or whatever it is you're building, and If you do, we're going to try getting it down to 15%, but you have to build your product, make your product in the USA.
And how about every working person who's watching would love to be able to see dividend tax maybe much lower, capital gains much lower?
Well, we're going to be talking about that, and we're really talking about lowering taxes. Last time, as you know, we took it probably from close to 44, 45% down to 21. Everyone said that was impossible. Now, it was always I really wanted to get it down to 15, and we'll be able to do that. And if you remember, we had the best 3 years in the history of our country from the standpoint of the economy. And you've been so professional and so good. I haven't seen you so much since I've been a politician.
Well, thank you, sir. We were together, and I was grateful to be a judge on The Apprentice. We had a great time.
That's right. You were a judge. He was a tough judge. He was a tough judge.
Well, we had to eliminate some people who didn't cut the mustard. You made me a hatchet, man. I respect that.
Yeah, well, we're going to be doing the same thing. I can tell you this. Unfortunately, there's too many of them. But I think we're going to really incentivize the country to go back and work, and they will be incentivized. They're going to do well. People are going to be very happy. JD is very much involved, and I have a great partner right over here with our First Lady. People love our First Lady, and we're going to do something very special. We have some great people up there. You saw some of the people on the cabinet, and we have some of the most successful people in the country, and we're dealing with the most successful people, and those are the people that put others to work. And we're going to be hitting job numbers, and as you probably heard me say, we picked up, since just the election, $3 trillion in, you call it worth or value, but $3 trillion was picked up since November 5th, so that's pretty good.
When President Reagan was here, he talked about putting the bear into hibernation, letting the bull run free.
Yeah.
Sound like a good motto?
Sounds perfect. I can't do any better than that. That's what we're going to do.
All right. Now, I know we've got some other people here, but I don't see Elon Musk. I was hoping, because he's been a good, I'd say a good aid to you on a lot of different things, whether it be crypto or whether it be GLP-1 drugs. I mean, a lot of different ideas.
Well, he's got a lot of ideas. He's a great, and I guess his stock has done pretty well. Everybody's stock has done well since the election and even before. And Scott Bessent's done a fantastic job. And one of the things I liked about Scott is that he said long before I even know who he was that the market's only doing well. This is before the election. It's only doing well because they think Trump is going to win. So we made Scott the Treasury Secretary, which everybody frankly wanted, and he's going to do a fantastic job.
Meantime, how about a crypto? Really, we do need, I think, you're embracing crypto, very different from the previous administration. Strategic Petroleum Reserve like for crypto?
Yeah, I think so. We're going to do something great with crypto because we don't want China or anybody else, not just China, but others are embracing it, and we want to be the head. We're going to be ahead of AI. We're going to be way ahead of AI, and we've got to produce tremendous amounts of electricity. You know that. It's unbelievable when you think that we need more than twice what we already have. If you think that's pretty for a specific industry, but we'll be able to do it. We have Lee Zeldin in charge of the environment. He's going to be giving us very strong approvals, I think, and he's going to make sure everything's good and clean and proper, but he's going to give us very fast approvals.
Natural gas makes it so that we should be able to afford it and be able to handle the 5% per year grid. Right. But obviously you think that we need to be able to be the king of AI, which means that we also have to, some people would say, protect Taiwan, because China would like very much to be able to have that technology.
Well, we're going to be having a lot of talks with China. We have a good relationship with China. I have a surprising relationship. Now, when the COVID came in, I sort of cut it off. That was a step too far. That was, as they say, a bridge too far. But we've been talking and discussing with President Xi some things and other world leaders. And I think we're going to do very well all around. And we've been abused as a country. We've been badly abused from an economic standpoint, I think. And even militarily, you know, we put up all the money, they put up nothing, and then they abuse us on the economy. And we just can't let that happen. We're not going to be abused anymore. We put America first, but we're also going to help other countries.
I know you've got a ton of things to do, but what can you say to the working person who owns stocks? Should they buy more stock?
Well, I don't want to get into a situation where they do and we have a dip or something, because that can always happen. You know that better than anybody in the world, probably. I think you're the leading authority in going up and going down, but you always end up. He always ends up. That's the good news. But we have like Doug Burgum standing right over here. He's done a fantastic job. He's been on your show many times. And we have just tremendous people. I would say this, I think long term, this is going to be a country like no other. We had the 3 best years ever until COVID came in. And then we did a good job getting rid of it, the stock. market. If you look at the markets, were higher than just previous to COVID coming in when we handed it over. And now we know, I know the people, I know the players. When I came in, it was very interesting, Jim. I came in and I was not a Washington guy. I didn't know too many people in Washington. I had to rely. Now do I know people? I know people so much, they're coming out of my ears. So we have great people.
Mark Zuckerberg?
Well, Mark Zuckerberg's been over to see me, and I can tell you Elon is another, and Jeff Bezos is coming up next week. And I want to get ideas from them. Look, we want them to do well. We want everybody, and we want great jobs, fantastic salaries. We want people to love, and, you know, when they wake up in the morning, like, get up, and I love to go to work. I want to go to work. We want people working, and we want them working for a lot of money.
All right, Mr. President. Thank you so much. Good to talk to you again. Thank you. Thank you. Thank you. Thank you, Vice President-elect. Thank you. Thank you very much. Thank you.
Jim, just an incredible ad hoc moment of live television there. Our Jim Cramer talking to the president-elect, ringing the opening bell here at the.
Okay, so we got some takeaways from that. Number one, that last sentence, did you guys catch that? Mark Zuckerberg met with me last week. Robinhood going green right here, up 1%, Tesla 421. I meet with Elon all the time, and I'm meeting Jeff Bezos next week. So he said he just met with Zucks. He sees Elon often, and now he's seeing Jeff Bezos. Meta, Tesla, and Amazon are basically making sure that they are in the good graces of this administration. On top of that, Zuckerberg donated, I don't know if you want to donate it, whatever it may be. I think it's a donation. $1 million to a Trump inaugural fund yesterday. Meta donates $1 million to Trump inauguration. Oh, it's his inauguration fund. So I don't know exactly what the inauguration fund is for. I imagine it's for some stuff with funding the inauguration, but Zucks gave them $1 million yesterday. So when you talk about lobbying, when you talk about, you know, a little Christmas gift to make sure things are okay, even though, you know, in the context of Zucks, they banned the president from the platform 3 years ago, right? Like Zucks is trying to be like, let's forget about that. You know, here's $1 million. It makes sense that a lot of these companies are trying to get back together with Trump because they're going to have to deal with him for the next 4 years. Tesla right here at 419. Amazon, Jeff Bezos did speak favorably of Trump at the DealBook conference last week, so it makes sense that he's meeting with him. He also said he's actively in Amazon's day-to-day, so probably still cares about Amazon a lot. 228 on Amazon right here. And then Meta, 632. Meta is green. Meta just turns green currently right now. It goes back to what I said yesterday, right? There's conflicts of interest everywhere, right? The question is, if you're accepting reality, do we accept that if these conflicts of interest are inevitable, how do we engage with these conflicts of interest, aka lobbying, etc.? And when you're very powerful like Zucks or Elon or Bezos, and you need the ability to actually access political capital, you got to be best friends with the people that have that capital. And in that case, that is this current White House. We're going to see if that ends up working out for them over the next 4 years. You know, the relationships can get sour, but as of now, they are trying to embrace what this Trump administration would look like. Here's Bill Ackman. Let's hear a little bit from him, and then we'll talk about the Robinhood metrics. We'll have TJ joining in a little bit, but here's what Bill Ackman has to say about Trump.
It doesn't always happen.
Morning long, Bill, welcome. Good to have you.
Thank you.
What'd you make it today?
It's a great day. It's a great day because the president's in obviously great spirits, and we're stepping into, I would say, the most pro-growth, pro-business, pro-American administration I've perhaps seen in my adult lifetime, certainly.
The president mentioned the word incentive and incentive theory. Upstairs, downstairs, how would you characterize corporate America's appetite for responding to those incentives?
Ebullience. Yeah. So we just had a nice little ceremony, and CEOs of broad array of big American companies, and I would say everyone is incredibly enthusiastic, really about a new administration that's about efficiency, removing the impediments to growth, deregulation. I think a lot of confidence that comes from that.
Yeah. Sorry, Bill, I hear that as well, of course. The investment community, though, the things that seem to concern some people are the unknowns, tariffs and deportations. Do you share that at least concern, or what is your sense as to how that's going to go? The impact on inflation, obviously, is a key component, potentially, if both are quite deep and severe.
Sure. So, look, I think with respect to immigration, the president's very focused on the safety of the American people and having an open border, not vetting people coming in, having criminals into the country, I think that's the number one priority, and that is a actually pro-economy move. If you
Right.
get rid of people who are causing harm.
That's 100,000 people, not 11 million potentially.
Unfortunately, I think it's more than that, but that's a priority. Look, I think the overarching theme is President Trump will do nothing that interferes with the success of the country, the success of the economy. That's absolutely his number. Other than our national defense, that's his number one issue. So I think he's being very thoughtful about tariffs.
You do?
I think it's a very powerful tool that can be used to level the playing field. I think that's what he wants. He wants a level playing field for the country.
So what do we say to someone like Janet Yellen's Secretary of Treasury? She just says, look, this is inflationary. We really got to be very careful. Many things can go wrong with what he's talking about. I mean, I'm not hearing that from you, obviously.
Yeah, no, I would say I'm more optimistic about the economy, the country in a very long time.
And do you find there are people out here that surprise you with being optimistic? You were very early on the bandwagon, but there are others who weren't, who seem to be, like Jeff Bezos coming. I mean, it seems to be a change of tune.
Yeah, I don't know anyone who is opposed to the business plan of this next administration. And I think, by the way, this is a bit of a self-fulfilling prophecy, right? If business confidence, the backdrop is you got a Fed that's lowering rates, right? You have inflation under control. You have a FTC, which is going to be more thoughtful about allowing transactions to happen. That's very bullish for markets kind of generally.
No doubt about it. We talk about it all the time.
You've got the wealth effect, right? As markets, the biggest investment for most people today is their pension or their stock market related portfolio. Housing prices going up, right? So you've had meaningful increase in asset values in a relatively short period of time. That has a pro-economy effect. So all of these are kind of pro-secular in a very positive way for the economy. So I think it makes sense that he chose this spot to accept his Time magazine cover.
There you go. There you go. Ackman has been a long supporter of Trump, and he continues to support Trump and basically make the case for why being pro-growth would mean that it makes sense to accept the Time magazine cover by ringing the bell. This is going to be the report card for Trump. He even did say, hey, I don't know if stocks are the best buy right now because there could obviously be a dip, but he is going to be hoping that at the end of these 4 years, stocks are higher than where they currently are. All right, so some super chats. Rob, thank you for the $9 super chat. Rob, you send like a $10 super chat every day. You do not have to do that. I appreciate you. But you said, amid Trump said America will be the head of AI. Which AI company do you think will benefit the most? I do think. I know, Rob, you definitely want to hear this, so maybe that's why you're paying the $10. But I do think Palantir is going to benefit from that. We talked about this a lot yesterday. Palantir has pretty much everyone in the White House that you could want for them to be in the White House benefiting. In fact, here's another thing on Palantir real quick. Let me show you guys this. So, a lot of people, every time we mention Palantir with Doge, they think, oh, it's just kind of this like pie in the sky theory. Dude, a lot of other people are agreeing with us. Take a look at what the Perplexity CEO tweeted yesterday. Perplexity CEO tweeted, Palantir could handle better the immigration for the government with better software and faster decision-making if the government were to give them a deal to navigate the chaos that we have currently, which is the American immigration system. I mean, the fact that the Perplexity CEO, who's, I would say, a pretty smart guy, $9 billion company, right, trying to take on Google, if he's saying, hey, yeah, we think I think Palantir could actually do a better job than a lot of these other companies, they don't have to say that. The fact that they're saying that means that they're starting to recognize Palantir's brand and actually give them the credit they deserve on resolving some things in the government. So look, I do think Trump being the head of the White House and all of his people inside of the White House is bullish for Palantir. I also think in general, all of the Mag 7, Tesla, Nvidia, Google, Amazon, Meta, they all should do well under AI. I think Google's going to not be investigated as much anymore. The FTC is going to let Google do its thing. They're going to be able to progress in AI. Quantum computing is not going to have to get broken up from the Chrome browser and YouTube. Like, I think AI is going to have its heyday over the next 4 years in the United States. And I think Trump wants that to happen. And in order for that to happen, you need to let these companies be who they are. Tesla right here is going just slightly green, 423.67 right now. The other thing that's important is that I don't think it's going to be a monopoly on big tech companies having control over AI, because David Sachs, who owns a VC fund and who is on the side of the startup against the big tech company, more so than the big tech company against the startup, because literally he has a monetary incentive to make sure his startups can, go up thousands of percent. He's also going to be regulating or influencing regulations on AI that is conducive to help startups, not just help Microsoft and Google. So I think you've got a good mix of not over determining the capacity for Google to be productive by breaking them up, but you also have people in the White House that are able to make sure Google doesn't get the best policies that lock out any other competitor like a Perplexity from gaining any market share. And I think all that together is what leads there to be some momentum when it comes to AI. Where is SoFi? SoFi. Again, they got a good deal this morning. Good tech deal. SoFi right here is at 16.26, up 2%. And Hood is at $38. All right, so let's talk about Hood. Let's do a little segment on Hood. Brian says the Australia pension is now buying Bitcoin. Yeah, I agree. We've talked about that this morning. We are seeing people around the world decide they want to get in on the action, and that's why Bitcoin as well is holding above 101,000. Okay, so Hood. Do we have Costco earnings this evening? We do? We have Costco earnings? Oh, we do. Holy crap. All right, Costco and Broadcom today. Market close, folks. Costco and Broadcom. There we go. By the way, put in the chat if you go to Costco every month. I want to say how many people actually use Costco. How many people actually go to Costco? How many people go to Costco? I'm curious. But I mean, my family shops at Costco, so I imagine a lot of Americans do. But Costco, over $1,000 bucks. That's going to be big earnings along with Broadcom. Okay, so Robinhood. I was running the numbers last night. Okay, I was running the numbers. I ran the numbers. Okay, everyone goes to Costco. Everyone seems like everyone goes to Costco. I was running the numbers. I did my math. My math is not fully done, but I'm looking at $900 million of revenue in Q4 for Robinhood. $900 million of revenue. Now, I did that math and I couldn't believe it for a second. So I said, well, what are the analysts thinking? The last time I checked the analyst expectations for Robinhood for Q4, $654 million. That was, I believe, early November, $654 million. So it's been a while, but I specifically remember because I was doing my comps and I have a Google Doc where I keep track of everything. $654 million. I checked it last night. And not only did it increase from November, it increased this morning from last night. Last night, it was $814 million. This morning, it's $819 million. They are expecting Robinhood to bring in almost $820 million of revenue. And a month ago, they expected $654 million. So the fact that they're having these massive expectation increases means that the street is obviously thinking that Robinhood's going to have a good quarter. Now, why is the street thinking that? Well, let's just take a look at the November metrics. I mean, they were just jaw-dropping. 420,000 accounts, 34 billion under custody in terms of new assets. Now they have 195 billion in total, 5.6 billion in net deposits, which is the lifeline of any company that's in the financial services sector. 147 billion in equity trading volumes, 155 million option contracts traded, 35.2 billion in crypto trading volumes, with less than 10% of the coins that Coinbase has, and they're only in the United States. Coinbase is international, so Robinhood's doing this just inside of the United States. Half of Coinbase's volumes in one country when Coinbase is international. And then 600 million in margin book balances, now 6.8 billion in total. Chris, I'll call you in just 1 second. So Robinhood did 10 billion of deposits in Q3. They just did 10.8 billion in the first 2 months of Q4. They did 15 billion of crypto trading volumes in Q3. They just did 41 billion in the first 2 months of Q4. And assets under custody have almost doubled in 11 months, 102 billion to 194 billion. And they still have the month of December. This is why, to me, Robinhood is still a buy. I mean, the fact that they're flirting with $1 billion of revenue in Q4, and the analysts have figured it out because they raised the projections by 200 million. That's why you get some of this momentum in the context of what we're seeing for Robinhood. So look, that's why I'm excited for it. That's why I'd be buying right here. I did buy here a couple of days ago, so I have no problem buying at this range. And I think it makes a lot of sense right here. Grab is down 2%. Tesla getting green, 424. Adobe, 481. Google, 195. SoFi, 1612. Meta, 632. Amazon, 228. And we got Reddit right here at 167.26 currently right now. Yeah, guys, I think I'm going to need to make some new mods in the chat as well. I've noticed since the streams have grown, we are getting a decent amount of spammers every day. It's okay to say whatever you want in the chat, but there's some people that have some random stock and they just like keep spamming the ticker. So if you want to be a mod, please DM me on Twitter, because I definitely think we need some new mods because we just can't have spam in the chat. Like, we got to keep the chat. We got to keep the chat open to make sure, it's normal. Otherwise, it gets too bad. So please DM me on Twitter, and I will make some mods pretty soon. And if you see spam, just please get rid of it. All right, let's call Chris. Let's get his thoughts on what's going on in the markets today, and let's see what he has to think about Trump as well, and how he rang the bell. A mod stands for moderator. A mod stands for moderator.
Dude, how's it going?
Chris, what's up? You're live on the Market Open. How are you?
Dude, when you guys called me about Open Door on Saturday, and I know I poo-pooed the idea a little bit, but...
Hold on. All right, let me set the backdrop. So let me set the back because this is interesting. Steve and I called Steve because someone that I respect said, "Hey, look at Open Door." So I called Steve. Steve didn't like the idea. He said, "Hey, let's call Kris." We called you, and you rightfully showed us why it's a tough idea to get behind. Did you have a little bit of a change of heart?
No, not at all. I actually wanted to give you and the viewers a bit of I wouldn't call it a suggestion, but a place to look based on the data and everything that just transpired with Trump right now. You guys, the reason why you called me was because you wanted to know, like, oh, you know what, is Open Door going to be like a really big idea? And believe it or not, I don't think so. But there is an idea right now that I have that I will share with you guys, especially, and I've already shared it with my Patreon people, but I'll share it with you guys, and that's looking at infrastructure with regards to oil and natural gas. Okay, one of the key takeaways that I got from not just this talk and interview with Trump right now, but also on seeing some of the people that he's put in place. He kept mentioning Lee Zeldin Energy, right? If that doesn't give you like,
what is Lee Zeldin? Is that a company?
No, Lee Zeldin is a House rep from Long Island, which he's going to be in charge of the EPA. Okay. There are a lot of projects in the United States that all they're really like waiting on is some issues around court cases that may be pending litigation around development, fully financed projects that are like multi-billion-dollar projects. Okay, multi-billion-dollar projects, capital commitments from freaking everywhere that basically are going to propel the United States into being one of the most dominant figures when it comes to AI, not just AI, sorry, with oil and natural gas. And I think right now the Trump administration is really going to be setting up that specific, and there's literally like one or two companies that are going to benefit tremendously. And I think if everything turns out right on it, and if I end up buying as much as I have right now and then doubling my position, I'm talking about private jet money.
So what are these tickers? What are you looking at?
I'm not gonna put it out right now because, like I said,
you're gonna piss off 3,000 people by not saying your name.
I really don't care. No, the Patreon people pay me enough to not put everything out there in the open like that, so I'm not gonna do it. But the point is, I'll give you guys a clue right now. Be really bullish for oil and natural gas infrastructure, not commodity, not production, but infrastructure. That could include pipelines, shipping, LNG regasification. What do you call it? Gasification and shipping. All of those sectors are going to do extremely well.
Well, do those do well because it's drill baby drill, or what's the underlying logic behind why those do well?
Okay, so there are industries out there that make money, and this is something that me and Steve were talking to you about, which is like buying the pipelines underneath the United States. Basically, that's where oil and natural gas get transported, right? And it's like a giant toll bridge. If you're building out all these data centers, you're going to need energy. If you're going to need energy, you're going to need natural gas power plants because those are the only ones that can support the crazy level of energy required to support all these data centers, right? Unless you go to like coal, which no one's trying to go to coal. So nuclear is about 5 to 10 years away from being even remotely commercialized. So you have this giant bridge fuel in natural gas, right? So how do you get natural gas to the power plant and then take the power plant energy that goes into these data centers? Well, you're going to need infrastructure. You're going to need toll bridges, quote unquote, or companies that have toll bridge like margins, where basically once you build out a pipeline, you've got cash flow for the next God knows how many years, right? And that cash flow goes right into your pocket as an investor. So you
don't have to say which name, but Enbridge, ET, Kinder Morgan, these are kind of the companies in the space of what you're talking about.
Right. So those are the companies that already exist with the current regulations out there and the current pipeline infrastructure already built. But there are companies right now that are working on new projects that are still in their infancy, but are fully ready to go. So those are the ones you want to kind of focus in on. So
you'd rather be in this infrastructure for energy and for natural gas over nuclear, is what you're saying?
Yeah. Very, very clearly. Yep.
Why?
Well, I just said it. Nuclear is still 5 to 10 years away from a regulatory approval standpoint. It's going to take a while for it to get commercialization. And then also you have to deal with localities. Like, here's a question. You want a nuclear power plant, even if it's a small one built by your house?
No.
Yeah, good luck. Good luck getting that through most counties, cities, and that. So because it's such an unproven technology and because of the past disasters, you're going to need like a huge change in sentiment with nuclear. With natural gas, bro, you got natural gas plants all over you and you don't even notice where they are, Yeah. So traditional natural gas energy is going to be a big thing. The other thing is one of the major suppliers of natural gas around the planet is Russia. And now people are like, yeah, we don't want to buy Russian gas because of X, Y, and Z, right? So the Europeans right now, Trump has gone to the Europe and said, you motherfuckers are going to buy our natural gas. Otherwise, I'm going to tariff you. I mean, you can't even make this up. So all of this leads to capacity. And what do you need to do for capacity? You need to build. And because of that, like I said, there's still companies in their infancy right now. People are not recognizing their value. But I guarantee you buy it today, in 2030, your kids are going to be basically, going to school, and you'll be chilling at home, retired with cash flows coming in for the next 100 years. Well, not 100, probably in the next 50 years.
I think you might be talking about next. I think that's the ticker.
It could be.
I think this is definitely the ticker that you're looking at. Okay, so here's my question. Riot got this Bitcoin mining energy hyperscaler thing today. Are you at all bullish on the data center build out more than the data center for natural gas build out? Or how do you resolve those two things?
So my investing philosophy is everyone is looking at something. I'm looking at what provides it. So I know a lot of people be like, oh my God, look, NVIDIA GPUs. But I'm like, okay, well, who does NVIDIA build for those GPUs? It's TSMC. So you want to be in that thing that no one recognizes.
Right. That's originally, you called SMCI at $7 originally because no one was recognizing that you needed servers for the GPUs.
Exactly. And look what happened there. So I think right now people are focused on the data centers, which is great, but that's where Wall Street is looking. So if you want to beat Wall Street, you got to look where they're not looking.
Okay, so energy infrastructure is more important to you than just the hyperscaler data center plays because those are kind of already out there, essentially.
Without that energy, the data centers are just a giant freaking computer. Okay, you need the energy to run these things, and you don't just need a little bit of energy; you need a lot of energy to run it. So, and if you need a lot of energy to run it, you need power plants. But on top of it, you need feed gas into it in order to, basically produce the energy, right? So some people will take this as, well, I should buy the commodity of natural gas. No, you should not buy natural gas. The reason why you don't want to buy natural gas is because natural gas will cause inflation, which means that Trump is going to put every incentive out there to produce more natural gas. But once again, you don't want to be in the commodity. You want to be in the sector that basically transports that commodity. So this way, well, number one, you don't have the cyclicality. Whether the price of natural gas is $1 BCF or it's $50 BCF, you will make money because you own the toll bridge between New York City and New Jersey, right? That is what you want to do. You want to fucking buy businesses that are right there in that toll bridge. And basically no one else is going to build another toll bridge, or at least the chances of someone else building another toll bridge right next to you is little to none. So you've got a giant moat around that business as well. So you go 5 years out, 10 years out, you think every developing country on the planet is going to be like, yeah, let's use less energy. No, everyone's going to use more energy. And where are you going to get that energy? You're going to get it from sources like liquefied natural gas. So you want to own the infrastructure that takes care of that for you,
Right.
So,
okay, so last question for you. Trump's speech, what was your raw reaction to it?
I mean, it's overall bullish for the country, right? You want a president who definitely supports the stock market. So this is something that Tom Lee pointed out a couple of days ago or yesterday. But he said, the Trump put is in effect, which means that if he sees the stock market dropping, he's likely to take action to basically support the markets, which means that the chances of a major correction are probably off the table. I can't say that, if we get freaking nuclear strike on New York City or something like that, definitely the markets are going to crash. And Trump can't really do anything about that. But in terms of existential risk with regards to something like credit, Trump can come in and basically, get some jawboning done to make, people more confident in investing. Those kinds of things are off the table. So I know a lot of people right now are concerned with valuations because, S&P 500 valuations are really high, even if you look historically. And usually around this time is when people start to get nervous, which is why guys like Buffett are building up a cash position to take advantage of any sort of major correction, in which case now they can really buy the dip. The thing that I would challenge against that is that right now, 30 to 40% of the S&P 500, it's pretty much just the Mag 7. Okay, so there's still a lot of room for people to catch up. So the idea that we're going to get a giant market correction doesn't seem to be the case in my thesis right now. So overall, still long.
What do you make sense of CPI and PPI being harder than expected?
I think those are just tantrums that are happening in the market. Where you're going to have a little bit of movement up and down. I don't think that the general trend of inflation going down is broken. The one thing that I have been noticing is that price of real estate is coming down. Housing is being built like there's no tomorrow. And then at the same time, you've got certain regions where the inventory of homes are pretty substantial. They've recovered to pre-COVID levels. And these are not like small areas. So home prices are definitely flatlining and in some areas coming down, which is good for inflation because that is a big part of the CPI number. But it's something that's not going to show up on your day-to-day points like every day. You're going to have to wait and see that. The other thing that I think will be really helpful is probably next year when you have these year-over-year comparisons. A lot of those data points are going to start to finally materialize into the equations that come around. And then there's also the question around these deportations and cutting of employees by Doge. When I look at that, yes, I feel for the people that could possibly lose their jobs, but then you also have to take into consideration, how will that impact the rest of the economy? And we could be headed for, a little bit of a slower wage growth environment, but hopefully the private sector picks up its growth to absorb all of the reduction in federal spend. So basically it's kind of like the net where you want to incentivize the private sector to do more while at the same time reducing down the size of government. That would be the ideal scenario where, yes, people will lose jobs in the federal sector and state and local areas, from budget cuts and everything else. But then the private sector will pick up jobs and basically, the economy will be better suited with a higher rate of growth with regards to the private economy rather than just incremental government spending, which, government spending is great to help boost economies when things are down, but you don't want to become too reliant. Otherwise, that shit is just like fucking socialism, dude. And that's not innovative, and we're an innovative country. So I think the private sector does it the best. That's how capitalism really works. So if you have a federal job and say local job right now, and you think that you're going to be laid off anytime soon, dude, don't be scared. Dust off the resume, get all your trainings, get all your stuff together, because the private sector under Trump could really do well, and you could end up with a job that might be even better than what you have right now.
Do you think Tesla's valuation right here is justified at 423?
It's all about potential now. So I think people are considering the potential of Tesla, not just in the space of automotive anymore. I think they're seeing that this is a high-tech company with software-like margin with some of its other products that could be coming around. So, people are assuming. I'm not the biggest bull on Tesla. I think Tesla can come down just as easily as gone up. But I will say this, if it goes low enough this time around, I will definitely buy some Tesla. After being in FSD for a little bit, I'm sold on the idea of FSD being a real game changer for not just for us, but for the entire world's economy going into 5 years.
Okay, last question for you, Kris. So not Palantir the stock, but Palantir the company. We saw 2 days ago Jacob Hellberg, another senior advisor to Palantir, is in the White House. What is your take on the Doge government pipeline to Palantir?
No, it's awesome, dude. It's really awesome to see. Like I said, the private sector does a really great job, and they do it very efficiently, especially if they're managed really well. They do really good work. So right now, me, you, I don't know if anyone else here, how many times you've gone to the DMV and had to freaking wait in line to fill out a form that do that? I mean, do you really think that that's necessary in today's world anymore, where you can't just hand them your freaking driver's license and have all your data already pulled up for you? Like,
Yeah.
why do we put ourselves through this fucking mess that the government creates? Like, if you've ever, like, anyone here who's a veteran, if you've ever been to the VA, you'll know exactly what I'm talking about. You go there, it's like, oh yeah, come back in freaking 3 months. You telling me I have to wait 3 months for one freaking appointment? Are you freaking nuts? Like, and then the private side, you just go to the hospital. You have the insurance, like TRICARE. Boom, they see you. They take care of you. You're done. Like, appointment next week. Let's get it done. So I think a lot of times what happens is people are used to like the government like doing things, and then it ends up being very sclerotic. And I think just taking some of that sclerosis off the way that we do business would be really, really helpful. You know, and and let me just say one thing. Compared to India, compared to a lot of other foreign countries, the U.S. federal bureaucracy is still 100 times better. But that doesn't mean that we should stop progress. It means that, you know what, let's improve ourselves to be even better than them again. You know, so right now, like, my dad right now is in India. Do you know what an Aadhaar card is in India? Do you know what that is?
No.
It's like this like national ID card that basically like ties you. It's like our version of like the Social Security thing. And let me tell you, in India, it's a freaking pain in the ass to get if you're not like if you're not Indian. Like, my dad is technically, he's Indian, but, you know, he's a U.S. citizen who's like moved there and lives there now. But so he's supposed to be entitled to an Aadhaar card because we like own land and all this other stuff. But the process of getting it is like a pain in the ass. We got to go to like 5 different people. You got to get this certification, that. Here in the U.S., you want a driver's license, you go to Whitfield County, be like, hey, this is my electrical bill. I live here. Boom, here you go. Here's your driver's license. You know, give your birth certificate, of course, and your naturalization papers, or your passport, or your birth certificate, all that stuff. But it's quick. That's the beauty of the U.S. But that doesn't mean that we should stop trying to make things even better. You know.
Right.
Yeah.
All right. Got Kris's Twitter in the chat. You guys can check him out. Thank you, Kris. Appreciate it.
Yep.
We'll talk to you next time.
Bye.
Take care. All right, so that's what we got from Kris's perspective on what's going on here in the markets. So again, Trump was at the bell today. He rang the bell. We do have a little bit of a 1030 slump happening. Warner Brothers Discovery is up 13% because they are separating their cable business, I believe. And that is getting the market excited for what they're doing. Warner Brothers, again, has a lot of debt. So that's one thing to remember about these guys. But they are spinning off some of their linear TV businesses and the streaming business. So HBO Max, I believe. And that should be happening by 2025. That's why that stock is up 13% currently right now. Robinhood, $38. SoFi, $16.16. Palantir, $73.95. Palantir holding up nicely, up 2%. ET, $19.31. Look, I don't really know what stock Kris was talking about. I think it's next decade, and it's already up 1.47% right now. I genuinely don't know. I actually have not gone into his Discord and find out what stock it is, but I think this is pretty much the stock that he's talking about in general. That liquefied natural gas energy infrastructure space that he's making a case for, I think is true. I think if AI demand is going to be that massive, all of it's not going to be solved by nuclear, although I do think nuclear is a good place to be in. A lot of it will be solved at the end of the day by natural gas, and the infrastructure for that, given Trump is now here and you're not going to have rejections of things like the Keystone Pipeline, those are probably going to get into effect. And if they get into effect, there's going to be a lot of momentum in the context of what we see when it comes to energy infrastructure. And, we kind of need it, because if we don't have it anytime soon, then we're not going to be able to supply all these data centers. So really a picks and shovels type of play that I think makes a lot of sense. Also, Opendoor, by the way, again, we were talking about it over the weekend. Me, Steve, and Kris, it was down 5% at one point. For those that are interested in this one, I think there's potential if rates come down and they increase their margins. As of now, they are not increasing their margins, and rates have not come down, particularly mortgage rates, enough to get the market excited about Opendoor. One last thing before I bring TJ onto the show, and we're going to do our option segment, is Robinhood got upgraded again. Goldman Sachs upgraded them to $48 from $42. They wrote today, bottom line, Hood reported November monthly metrics, which showed robust increases in equity and crypto volumes month over month as the company benefited from elevated trading volume post the U.S. election. Hood funded accounts rose in November, rising 2% month over month to 24.8 million. Based on the November run rate, fourth quarter trading revenues came in at 51% above consensus, with significant volume growth across Hood's 3 trading products, as highlighted in the pre-release November metrics. Altogether, we remain constructive on Hood's strong asset gathering activity. A lot of these firms are calling Hood a kind of more than a trading app, but an actual asset compounder, which is kind of what they're doing right here. And elevated customer activity levels positioning the company well for fourth quarter of 2024. They also saw their DARTs were healthy increases quarter over quarter across equity, options, and crypto. Yesterday, they got upgraded to $53 from $31 from Bank of America. So pretty much every firm on Wall Street has them above 45. A ton of them have them in the 50s. Mizuho has them at 60. And I would imagine anyone that has them below 40 at this point is just going to start raising their targets as these numbers continue to show the growth. So that's what we got on Hood. Tesla, 426. Tesla's green. Tesla's green, Palantir's green, Robinhood's green, SoFi's green, Google's slightly red, Meta just went green, 634, new all-time high for Meta. Grab, down 2% on the day, 530 right now. Archer, look at that. What a recovery on Archer. It was down 9%. Now it's down 1%, even with 430 million shares of dilution. Not bad, dude. Not bad at all. This recovery is nice. Celsius up 7%. Yeah, so Celsius got upgraded today. For all the Celsius bulls, you're having a decent week. Celsius got upgraded to 37, I think, from Morgan Stanley. And that's also why it's up currently right now. I will try to get the upgrade in a second, but yeah, 37, I believe, by one of the big banks that thinks their growth is going to be back next quarter. And that's why Celsius, I think it was up 4% yesterday. It's up 6% today. So you got a nice 10% move on Celsius. NVIDIA still down 1.9. Oh, we do have one headline on NVIDIA in China. So let me get that real quick, and then we will move on. NVIDIA. Okay, so NVIDIA is setting up China hiring, and they're focusing on AI for self-driving cars. NVIDIA has added 1,000 staff in China this year, bringing its total to 4,000, with about 200 hires in Beijing to enhance autonomous driving research. This comes as China's antitrust regulator probes NVIDIA 2020 Mellanox deal amid escalating U.S.-China trade tensions. One of the reasons I think NVIDIA is hiring more people in China is because China's trying to stimulate their economy. China's trying to get companies to hire more people and grow, and China just investigated NVIDIA. So again, going back to this whole conflict of interest lobbying thing, if we're going to be realistic, why is NVIDIA hiring more people? Probably because they want to show the CCP that they're being a good steward of the country, and they are employing people, and they shouldn't be investigated for being a monopoly, right? So they're trying to get into good graces of the CCP because they have to work with them inevitably. And that's why I think we got this deal with NVIDIA in China today. All right, folks, we are not going to have TJ on the show tomorrow when we usually do our options segment, so we are going to do that today. For those that are new to the channel, TJ the Wheel Deal is someone who has really changed my life this year by helping me understand the art of option selling in regards to puts and calls. We have a public portfolio together that we're going to go through in terms of some of our results, and I think it's going to be a good treat for you guys. He's going to show us how to use his wheel tracking spreadsheet. So if you want that spreadsheet, I'm going to do this right now. So, because I know you guys are going to ask, email amit@dailypalantir.com. That's the email. I sent a couple of them out today. I'll send the rest of them out today from some people that emailed. If you want the spreadsheet, email today. It's an Excel sheet. It's basically a template. It's a really good template that kind of for free you can get it. And it's if you're going to be serious about wheeling next year, I think you want to have this as kind of your way to manage your bankroll. TJ is going to spend some time actually explaining how the hell he manages it, because it is a little complicated. And hopefully this can be a good tutorial you look back on next year if you start to take options more seriously. TJ, good morning.
What's up, guys? How are you?
Well, something's up, and well, it was up. It might not be up anymore, but it was up, which is Riot, which it's still up 4% right here. You had the CEO of this bad boy on your show yesterday. I'm putting that in the chat right now. First of all, how was that experience? And second of all, it seems like they're going to become a energy data center space now.
Is that what's going on?
That is what's going on.
I don't know what's going on. Let me put on the hat, though.
I love that you have 100,000 shares and you have no idea why it's up 4% today.
Yeah, I saw something that some star something or another throwing money at them or some shit like that. I really don't know.
They're taking an activist stake, and the goal is to make them take some of their Bitcoin mining facilities and turn them into data centers for like Google and Amazon, etc.
So kind of like the HPCAI thing, or no?
Yeah, I mean, kind of just diversifying their business. They already have the facilities. Can they, have different use cases of all this essentially crazy infrastructure that you got to visit in Texas, right?
Yeah. And they're only about 40% done building that out. So they wanted to maintain the optionality to do whatever with the rest of it.
Right. Right.
Because what happens is Bitcoin mining is very capital intensive and it's not really profitable yet. So I think they're looking for a way to bring another stream of income while they shore up this other situation. So I say it's a lot like to the people that I help them with their investments here to the fund and whatnot. I tell him it's a lot like my father-in-law's law firm. My father-in-law's law firm supports like 5 or 6 other businesses.
Right.
Until they can afford to get on their feet. So I think that Riot and other Bitcoin miners are trying to bring in another source of revenue because this Bitcoin mining thing that is very, very capital intensive.
Right.
So
Right.
I guess it's just my guesses, right? We didn't talk about that too much yesterday, and Jason wasn't really going to divulge that kind of shit to us either. But
yeah.
He's cool, dude. I mean, and then I had already asked him all of this stuff in person. But I wanted to make sure that we could articulate it to the folks on the channel because there's a lot of people invested in Riot on my little channel.
Right.
And I was like, well, why don't we just ask him? And I even asked him about the freaking, about the ridiculous amounts of share-based compensation that show up on the balance sheet. But he did show us how all of that plays out, and it's not as bad as it looks on paper.
Oh, he said, TJ, I'm trying to make you some money. I need some money to make some money. So I got to do some dilution, right?
No, dude, it's performance based. So if the stock doesn't do that great, they don't actually get that much money.
Yeah. Yeah.
So I thought it was pretty cool. But anyway, where do you want to start, man? Let me hit present here. Let's kind of look at everything going on.
Yeah, so we'll go through the public portfolio first for like 20, 30 minutes, and then we'll do TJ's tutorial on the spreadsheet. But back to 11 million. Not bad.
Yeah, doing well. So here's the stocks, right? I've got them on total return, I think. Yeah, total returns. We got SoFi, Tesla, Riot, Amazon, PayPal, Hood, Palantir, Neo, Baba, Marathon, Pfizer. These 4 right here, these are swing trades that I'm in. They won't be there. Marathon could probably make the cut for another round, but these guys will certainly not be there by the end of the year. Like I'll cut them if I have cover calls against all of them. If those cover calls don't hit, if I'm up on the shares, I'm trying to raise cash going into next year. So those guys are not going to be in there. So this is the portfolio effectively. It's just these guys right here. But let's start with Hood.
Let's start with Hood. What are we doing?
Issues with these damn cover calls with Hood. So let's see. We didn't do anything last week. So let's see if maybe now is the time to say, hey, you know what? Got caught with my hand in the cookie jar, but I want to just go ahead and take my time out with mom and just remedy the situation, right?
Right.
So on the surface, it looks real good, up a cool 174 grand on 10,000 shares, but that's not all that's going on. We've got the four strategies. So we've got.
I'll explain them real quick, and then we can get into it. So we got covered calls, guys. For those that don't know what covered calls are, these are ways to generate income off your shares. So the best way to think of it is if you have tenants in your house, they have to pay rent to you as the landlord. If you own shares, you might want them to pay rent. And the best way to get them to pay rent, or one of the ways to get them to pay rent, is by selling a covered call. So if you have 100 shares of a stock, you can sell one covered call. We owned Robinhood at 21. We sold 50 covered calls, which equals 5,000 shares, 50 times 100 at 32. And because of selling that covered call at 32, we got a certain premium. Someone bought that call from us. And the only reason they were able to buy it is because we sold it to them, because buying a call is the right to control 100 shares. So the 100 shares have to come from somewhere. In this case, it came from our shares. And currently right now, that person's winning because Robinhood's at 38. It is well above the strike price. Their call is in the money. Our sold call is in the money, which is bad for us because that means we are losing the difference between 38 and 32, which is $6 on top of 5,000 shares, which is $30,000. So we're going to have to figure out how to navigate this situation. And part of that might be having to roll it. And so that's what we're going to look at right now.
Right. So we have $32 covered calls for January. Those are, problematic. Then in February, these are really problematic at 29. The ones at 45, I think we can argue that one's not really problematic at these prices because Robinhood is currently at 38.55. So the chances of it going to 45, I mean, they're there, but they're not like really there in my mind. So then we've got the long calls that I bought, and these are the saving grace. This is the reason that I don't have like as much pressure to roll these because these are printing. You know what I mean?
Right.
So there's that. But let's look at them because I want to graduate right here, right now on the record. I want to graduate Hood from a trade to an investment, meaning I want to be long Hood for the next 3 to 5 years minimum.
Oh wow, you made up your mind. You're legit.
Well, dude, I mean, I just think the writing's on the walls. I love SoFi, but at the pace that this company is innovating and rolling out products, I mean, dude, isn't that kind of what we all thought that SoFi was going to be? And SoFi is, but I also think that I finally just admitted, or I don't know if admitted to the world, just come to terms with, that they're kind of going after different customers.
Yeah.
To a certain degree, you know, because I was just like, dude, why doesn't SoFi want to just have a platform like Robinhood and they can essentially own all of it? But I just think that SoFi wants those buy, hold, and hope investors. But, oh, we'll let you buy options. We'll let you invest in SpaceX and all of this other shit that doesn't really make sense or appeal to me. But selling options now, you can buy them, but you can't sell them. And it's just whatever, you know, like I'm tired of hearing Anthony Noto say it's coming. It ain't coming, bro. Like it ain't coming because I don't think they give a shit. I don't think that they want maybe that kind of traffic on their platform. I don't know.
Yeah.
I don't know. But Robinhood, the only thing that's keeping Robinhood from being a top 3 position in the portfolio is that they don't pay money. They don't pay interest on your cash collateral. Once you deploy the cash secured puts, they don't give you that APY anymore. You don't qualify for the cash sweep. Whenever that happens, my goodness, dude, it's game over for the legacy banks, or the legacy brokers.
Right.
Like, I truly believe that this company is just that innovative. But
so
they can't make that money work yet, Amit. For whatever reasons, they can't make that money work yet to do it.
Do you want to average up? Do we want to buy another 5,000 shares and increase this position? How are you thinking of it?
Yeah, so I was thinking that there's two ways to do it. One is to buy more leaps, or to average up with the shares. I think it's more capital efficient to buy leaps. I was thinking about buying 100 leaps.
Yeah, I think that's fair. Well, what price did we average at? That we got them at 690. Okay.
Yeah, 690, and they're currently worth 1785. That's the problem with that. But I would buy them out of the money. You know, at the time, those were like in the money. So I was thinking about maybe buying another 50 or 100, but doing maybe like here we
45 around. I think that's reasonable.
Yeah, these would be home run lottery leaps, right? Like in other words, everything has to go perfect for Robinhood to print money for us. But yeah, I was thinking like something like right in this area here. And then I could sell calls against these, but ideally I would just want these to run for a while and not have that pressure on the cover calls against them. So even though it feels like we're paying quite a bit of premium, every time we sell cover calls against these leaps, we're going to bring some of that money back through the door to lower our break even, if you will.
Right. And I feel confident about this as well. Look, guys, do I think Hood can dip? Of course. It's ran up 200% a year. It absolutely can dip. It's just those November numbers plus this kind of pro-growth environment that we're in. It's hard to see him going back into the high 20s. Could that happen? Yeah. And then I think we would average down on these. But if these November metrics are similar to what December is going to look like as well, they're going to put up close to $1 billion of revenue next quarter.
Yeah. So let's just do the math. So let's just say I did 50. So that's like 65 grand, give or take, right? So we're going to get filled somewhere in the middle. So there's that option. The other option is just to average up and buy 5,000 more shares.
Let me do the math on that. So if we buy 5,000, that would be...
Tells you right here. So that's 192 grand. So y'all can see why options are more appealing, because it's about a third of the cost. And if I own these shares and I wanted to sell cover calls against these shares, or if I owned the leaps and wanted to sell cover calls against the leaps, the premium that we bring in via the cover calls is going to be the exact same. That's why there's a lot of people that do what I do for a living and they will never own one share of stock.
So let me say that again. So if we bought 5,000 shares right here, our average would go from 21 to 26.9, and TJ would have to spend more than 3x the amount versus buying the leaps. Now, the covered call premium, which is what TJ does for a living, he buys shares and he sells calls against them. If he buys the leaps for 64,000 versus 192,000 on the shares, which same exposure, 50, the covered call premium is the same.
Yeah.
The only difference here is if Robinhood runs like crazy, he has 5,000 shares that he can benefit from. But I'm assuming, TJ, the 50 leaps would have somewhat of a similar movement if
Yeah, it's all about its deltas, right? So whenever you own 100 shares, you have 100 delta. So that you guys like really understand that, right? When we buy the leaps or sell the leaps, there's a delta. So what does that delta mean? Is for every dollar that the price goes up or down to the underlying, that's how much your options price is going to move by that delta. So in this case here, if we did these right here and we look at the Greeks, we have a 65 delta. So for every dollar in movement, we're gaining 65% of that move.
Right.
So it's not 100 delta. If you want 100 delta, you got to buy them in the money. That's going to be more expensive. So the capital allocation is going to be more similar to owning the shares outright. If we were over here, say at 25 bucks, that's probably going to be a 90, 95 delta. That's an 84 delta.
Because it's so in the money that
right.
The
but
odds
it's also costing $20 a contract versus 13.
Right.
So those are the gimmies and the gotchas, right? So why would people do this? Because you want to be able to control the shares for the least amount of money possible. And you don't really have intention of selling cover calls right here, right now. You want the stock to run. So now you're profitable on your leap. So then you just have the option to just close the contract and call life good, right? Or you can do a quasi debit spread, but from the standpoint of where now I'm going to bring money in through the door via covered call premium. So I forked out 13, but then like, let's say I do a successful covered call campaign against it that brings in 50 cents. Now my net output is only 12.50 versus 13. And you play that game over and over for the next year and a half, 2 years, however long this trade is. And ideally you want to bring all of that money that you forked out on the front end, you want to bring it through the door via premiums, and then you're essentially free rolling whatever your contract is worth versus what you paid. That's going to be your net profit.
Yeah, and one thing that's important here, guys, as well, is that the benefit of paying that 190,000 on the shares versus on the leaps is that if Robinhood tanks badly, at least you own the shares, and hopefully the shares recover. If you own the leaps, I mean, look, you have time for them to recover, but to break even on the leaps, Robinhood's going to have to make a big move. And so the time decay on those leaps is going to kill you versus just having the shares and holding on forever.
Absolutely. There's no theta decay on shares. Shares don't expire unless the shit goes to zero, which has happened to me. The one company that comes to mind is a company called ives. Like this shit didn't quite go to zero, but it went to 0.002. So it's pretty close to zero, right? I think 100 shares. I just sold them on one of the accounts that I managed for the fund, and it was got $20 for 100 shares or something like that. I don't know. That's after reverse splits, dude. It was like 0.00 something.
Yeah.
So anyway, so that's an option. You know, that's an option. Buy 5,000 shares at these prices, man. That seems a little bit tougher to swallow. It's the safer play. Make no mistake about it. It's the safer play. Or we could do something that's a little closer to in the money or at the money, like right over here at 40. That would be probably in the $80,000 range, maybe.
Yeah, look, I think in 2 years, Robinhood is above $40. So I think that's.
So keep in mind, though, that's something that's real important for people to understand. In order for this, oh shit, we don't want to do that many. In order for this to work out, not only does it have to be above 40, it has to be above your break-even price.
Correct. Because you're paying $14.85 up front, so it has to be $54.85 to actually.
Right. So that's why people do this right here. That's why I bought them over here. You know, that's the smarter play now, because 30 plus 19, the break-even is 49. But
even if it's not above the break even, the value of the contract, which is what you're in this for, will still move higher as we approach the strike, which is what you're seeing on the $30 call right now.
If it happens quickly.
Correct.
Because if you have positive price movement, and because your theta decay, because this is an eroding asset, right? Whenever you buy long calls, if your price movement is in your favor, even if you're not even at your strike price yet, you can still be profitable on that transaction, because theta decay is so small on the first part of the contract. Now, on like the last quarter of the contract, that's when the theta decay really starts ramping you up. Whenever you sell options, you're collecting that theta. whenever you buy the options, every day that data is getting collected from you, right? So it's costing you money.
Right.
And, so it's one of those things. So just looking at it and thinking it through, spitballing, I think that right here is where it is the most responsible place. And I would think I would go in heavy with like 50, being prepared to average down. And then I'm like, well, if I sell 5, 6, 7 rounds of cover calls against this over the course of the next year and a half, it's going to be, at the very least, it's going to be very easy for me to break even.
Right.
But my bet is that I think that Robinhood is going to be probably in that $50, $55 range from where it is right now by the time this contract comes due, if you will. And if it moons to like 70 or 80, well, fantastic. Then now I have a decision to make. Do I just close out these contracts for a profit, or do I exercise these shares? Kind of like I intend to do here, is I intend to exercise those shares right there. So that's why I'm not that eager to just buy more shares right now, because I've already got a contract that says I'm going to buy these at $36.90 net, right?
Right.
I'm only going to have to pay 30, but we already paid the 690, but we've also collected some money on that 690, which is great. Correct. So I think that's where we're at right there. How do you feel about that one, Amit?
I think 35s are good. I like it.
So I just got to go here, get rid of this one, go here.
And again, I know Robinhood's trading up there, but it is down from the 43 levels. And I just don't know if we get back down to the low 30s. And if we do, we average down, but it's given those metrics, again, looking at the data, it's just hard to see us getting way back into the high 20s at this point.
Yeah, I don't think it'll happen.
Oh, why did it say release collateral, 5,000 shares of hood?
Yeah, 1 second. I'll tell you.
Oh, because of your.
Because whenever you buy calls, hold on. Let me try to get this filled real quick. Whenever you buy calls and you have covered calls against it, it's going to release your obligation to sell those shares.
Right.
So we'll see. We'll let it stew here. It's 80,000. We'll see what happens. There we go. So it already got filled.
So it released 5,000 shares because why again?
Because I sold calls, right? I have sold calls.
Oh, right.
Then we bought calls, right?
Right. You're right.
So now you're off the hook a little bit. So now we pull up the actual position again. It'll show you, which is right over here. So it's going to show now that there's still 10,000 shares owned. But then here it says stock collateral. Let me refresh this right here, because it's probably going to say 5,000 shares now.
Yeah, because now you've opened it up.
There it is.
There it is.
So the stock collateral is 5,000 shares. We can just walk through it now. You have an obligation to sell 5,000. You have an obligation to sell another 5,000. So that's 10. You have an obligation to sell another 5,000. So that's 15,000 shares. But you have the right to buy 5,000. You have the right to buy another 5,000. So that's a net 5,000 to the sell side.
Right.
You follow me?
Yep.
But you own 10,000 shares. So that's why there's only 5,000 shares that are compromised. Did you follow me, or did I lose you?
Oh, no, it makes sense. It makes a lot of sense.
So that's why it's a game of credits and debits. How many sells are there? How many buys are there? How many shares do you have? So that's going to give you a net stock collateral. If I bought another 50 contracts, then all of these covered calls, it's like whatever, because they know that you're good for it because you have the shares and you have contracts to buy more shares. So that it's going to take some of that pressure off. But that doesn't mean that you don't have to deal with these covered calls anymore.
Right.
Still got to deal with them. So let's deal with these one at a time. So what are we thinking here? So right now I'm looking at an intrinsic value and an extrinsic value. The intrinsic value is $5 or $6.74. So you take that coefficient, subtract it from the options price, which is $7.50, and that's going to give you your extrinsic value. The extrinsic value is the time value plus the implied volatility of the contract.
Right.
To me, I call it the protection against early assignment. So we have, less than $1 of protection against early assignment. What I mean by that, if somebody wants to exercise these contracts because they want to own these shares right now, that's the amount of money that they have to sacrifice in profits, which is about 75 cents or so. So, might not be the worst thing to just roll these right now and call it good. Some option sellers, myself included, are like, well, I don't want to give any extrinsic value. I want to milk it all. But then you have to be okay with the possibility of early assignment. Does early assignment happen when it's a non-dividend paying stock? Yes. Not that often, though. But
I mean, I got it the other day, but it was only one contract.
Yeah, it does happen. It has happened to me a handful of times. So it does happen. So people go out there and say, "Oh, you don't have any early assignment because it's non-dividend paying stock." They're lying to you, or they just haven't been in the game long enough.
Dude, when it happened, I wanted to fight, bro. I was like, "Who the fuck just took my shares, bro?" And the brokerage is like, "We sold them." I'm like, "What do you mean you sold them?" And like knowing that I was in an obligation to sell them, but still, I was just like, I wanted to square up with whoever took my shit.
Yeah, so you want to put pressure on this or take pressure off this thing, you just roll it a few months and call life good, increase the strike price. So right now the contract is to sell these in January. I'd look maybe over here like around May, something like that. And then we got to make good on the 750 if you want to walk them through that dynamic. So we can go from a 32 strike to a 38 strike break even. So we haven't quite caught up to the stock yet, but we're a lot closer. So we're now qualified for $6 more in capital appreciation in this move. Some people want to catch up to the stock and have breathing room. So they'll be like, well, I'm going to roll to like 45. Cool. You can do that. But then now that's going to cost you money. So I don't want to do that. I would rather just roll from behind as high as I can without it costing me money, only time.
Let me ask a question. And I think this is a good teaching segment for you to help us understand. What about if we go roll to 2027, $60 strike? What is the disadvantage to doing that? Because you'll get a lot of premium, but the shares will be held up for 2 years.
Yeah, so I think that's exactly what it is you just lose liquidity.
But if you're long the stock, does it matter?
Dude, I just did this with Tesla and I was saving this teaching segment, but you jumped the gun. So I'm going to show y'all what I did with Tesla in a second.
Okay.
So if you're legit long the stock and you don't want to deal with any more pressure and you understand that there's no longer going to be any cash flow coming in either, because it's like the equivalent of going back to that real estate analogy. This would be the equivalent of owning the shares, owning the house. You have a renter in there, and because things, the market conditions change, but now you have to honor your agreement saying, hey, you can live in this house for the next year and a half, and you only have to pay me a little bit more money, and I'm going to sell it to you at pretty favorable prices, probably. You have to be okay with that. You're not going to be able to really go in there and kick them out early either. So you got to really know what it is that you're signing up for. I don't ever do this just because I want to release the pressure of the covered call.
Right.
I do it because I'm legitimately long the stock. It's something that I just don't want to mess with anymore. I'm okay that there's no more cash flow coming in because I feel like the capital appreciation totally outperforms the cash flow that's coming in via the covered calls anyway.
Now here's the question.
Cheering against the stock.
Yeah, you're not cheering against it, but here's the question. If you personally believe Robinhood will be well over 60 in 2 years, which I don't know if you believe that or not, but does that factor into your decision-making of if this is worth it?
No, for me, no. What I look at more is the capital appreciation. You see, everybody always wants to look at where the stock's going to be.
Right.
I don't look at that. That's rookie shit for me. What I look at is what did I pay for the shares and what am I agreeing to sell those shares for? And is that amount of money sufficient for me? If I knew that that's exactly how the contract was going to play out, would I have signed up for it? In most cases, the answer is yes. But we are also blinded by knowing the answer to the test now, right?
Correct.
I don't get blinded by that shit anymore, bro. Like if you're telling me that I'm going to be able to buy these shares at 21.17 and sell these damn things for $60, sign me the hell up. Robinhood is at $100. That I'm counting somebody else's money right now. I'm only focused on my money, and then in a couple of years from now, I'll deal with it again. And do I want to go for another $20 in capital appreciation? I will have that decision to make.
So I was going to say that's a 3x in 2 years, which is incredible, right? That is an amazing return. Number two, if Robinhood did get to 100 by January 2027, I would imagine by that time you could roll these 60s into 85s for 2029 or something. You're still going to be playing catch up, but you're still going to get more appreciation as well. And that's the way
I think the big thing is people always grade themselves with where their strike price is versus where the share price is. I grade my trades based on what did I pay for the shares, how much money did I bring in, what was I comfortable selling the shares at? Was I okay with that transaction, living in that vacuum? And oftentimes the answer is yes for me. Because all of these people that say, oh, but it was trading at 80, you sold at 60. I'm like, I want you to send me all of your screenshots of where you sold at the top. I'll wait. My TJ the wheel deal is at the bottom. I'll wait for those screenshots to come in. You are a fucking liar. You know what I mean? That doesn't happen on purpose. It happens on accident.
100%. 100%.
Just like buying at the bottom only happens on accident. Dude, I've only done it like once and it was totally unintentional. I thought the shit was going to go down. It was a feeler bet. You know what I mean? And then the shit started going up. It happened with Riot at like $3.70 some cents or whatever it was. And I was like, this shit's going to go down to 2. I'll really load up, yo. But so I'm saying, because I know that I am not that good at buying at the bottom or selling at the top, I figured out a way to make static returns. And that's the game that I play.
And I think that's also a much healthier mindset, because everyone beats themselves up over making money. The one thing that 99.9% of the world doesn't do in the stock market, you make money and then you feel like people who probably sold Tesla at 395 or something that were in it since 100, now it's at 420. Like, you made a lot of money, right? And I think to keep your mindset healthy, you have to be okay with, I'm buying it at 20, I'm selling it at 60, and that's okay, even if it goes to 100. And maybe I can get a little bit more capital appreciation, but I'm not going to make myself feel like a horrible investor if that happens.
Bro, I'm just saying, dude, how many times have you sold shares and they kept going up after? Because it happened to me a lot. I sold Google in 2005. And it was everything that I had at the time. I had bought $16,000 at the IPO. And then, I'm sorry, it was like in 2007. And it went up some. And I needed that money to buy a house. And that money would be worth a lot more than the 80 grand that I got whenever I sold Google. But what am I going to do? Be angry at myself the rest of my life because my IPO money could have been worth probably about $1 million by now?
I had a friend who sold some Apple stock. He told me yesterday to pay for his college in 2013.
Yeah.
So, you know, Tesla, by the way, guys, at 429, and we're seeing that here right now. So, okay. So, what do we want to do on the roll, or do we want to wait till later to figure this out? What do you think?
No, dude, I think that I'd rather just handle it now, because I feel like we're not going to be coming on as often now because of the holidays and stuff. And I really don't want to look at this too either. Like, I'm just like, okay, cool. I'd rather deal with it now than when it was at like a 42 or 43, because this gives me an opportunity to actually bring some money through the door and increase my strike price, because it's not as underwater now. So I'm thankful for that. I don't know that I want to go way the hell out there though, but I'd be comfortable going maybe something like January of 2026. That way not to mess with it. And then we can put it at like $50. So no premiums really to speak of, but then have a nice little healthy round number at $50. And then I'll address this shit in like a year and call life good.
No, I think that's fair.
And then it just becomes like another buy, hold, and hope situation. So I'm a lot like you guys right now. I'm not bringing any money through the door.
Right.
But I'm okay with it because I feel like the capital appreciation is where I want to be with this thing.
Yeah, and you're going to get, instead of 32, you're going to get 50. So that's $18 more a share, which is not bad, you know?
Yeah, so now we just got to wait. So there's another one that I can address while we're waiting on that one. And then what I want to do is I want to go to the wheel tracker when we're done, and I'll show you how to input all this data and show you how the wheel tracker works. So
yeah, and again, amit@dailypalantir.com for everyone who wants the wheel tracker. I will send it out tonight, and we'll get a little tutorial right here today on how to. I need this tutorial more than anyone because I want to take this professionally next year, and so I need to know how to use this thing. Oh, real quick before you do, is it best to do Google Sheets or in Excel? You would recommend people buy an Excel subscription?
It's set up for both of them. Our wheel tracker is set up for both. I think it's called Numbers or something like that. There's Google Sheets, Numbers, and Microsoft Office.
Okay, so it works for both. Okay, perfect.
Yeah, like it's already set up. So I'm just trying to look at this one here. That's going to be like a 70 Jesus. So I'm going to do one where I actually roll for a debit as well. That way I show y'all all of it on the tracker. And I'm just cool with it because I want to. Oh, actually, I'd have to probably pay more money to get it to fill. Yeah,
Tesla's 428, folks. Palantir 74.47. Robinhood 39.42. Bitcoin is above 102,000 right now.
Okay, so we'll wait for those to fill. They'll probably show up at the top because they're pending. So let me walk y'all through what I did with Tesla, and I want to see how smart the people are in the class today. Like, why would I do that? And I want to see if you can figure out why I would choose to do this yesterday. So I have the 4,000 shares of Tesla at 199. So if that's all I had, oh, TJ is such a great investor. That's not what's going on. Not that good. So I have covered calls now for January of 2027, which is a lot what Amit just talked about, but I have them at 340. If y'all have been following this production here, I had these at 280 for January of 2026 up until yesterday. So I'm going to show this right here, hopefully, right here. So why would I do that right there, Amit? Why would I say, hey, give me $14,000 in credit, and I want to go from a 280 strike price for January of 2026 into a 340 strike price January of 2027. Walk me through, if you're TJ the wheel deal, why would you do that? Especially right now, like what do you think is the logic, the reasoning behind this move?
So your average is 200. You were going to sell them at 280, which is a nice $80 a share. Now you're getting an additional $60 by going from 280 to 340. You have to wait another year. But that's okay on 4,000 shares because now you're selling them at 340 versus 200, which is your average. So you make 140 a share. And I think the need to roll it now is because all the fundamentals of Tesla are taking place. The stock is running and it doesn't look like it's going to slow down. It could have some pullbacks, but the Trump White House, the FSD, robotics, all of that's coming together. And to be honest, it's a good hedge. If Tesla does have a little bit of a downturn, you've got these 340 covered calls protecting it. So it kind of is the best of both worlds here.
All of those things are true. I'm now qualified for an additional $240,000 in capital appreciation, going from 280 to 340 on 4,000 shares, right? So $60 a share times 4,000 is 240 grand, right?
Yeah.
The real reason I did it was for tax purposes. Because I was able to lock in a loss on those covered calls to the tune of about $400,000.
So I found this out last week and the chat helped me with this. I found out that when you close a covered call and open a new one,
realized loss.
It's pretty damn cool.
I'm telling you, bro, this is tax harvesting squared. This is tax harvesting 201. Everybody's like, oh, I just got to go sell my shares at a loss and I can't buy back in for 30 days. Yeah, that's part of it. Well, let me show you another thing. And that's why I don't mind being underwater on some covered calls, because come tax season, these things turn into my saving grace. Now, granted, I have to roll prematurely because I didn't really want to roll. I still had some extrinsic value left on the clock. But I was like, well, what's going to help me more? Eliminating $400,000 in capital gains that I don't have to pay taxes on? Would that help me? Would it help me psychologically being qualified for another $240, 240 grand of capital appreciation? It's almost like a CD. Now I got to wait for it to mature another year. Am I okay with that? Am I legit long Tesla? If this thing comes coming back down to 200, am I going to be angry? That's the other part that people never talk about with these covered calls. When you roll, you lose liquidity, right?
Yeah.
And you also have to be okay if the stock crashes way below your strike price, because when you go to close out that covered call, you haven't collected enough theta yet, dude, and your delta isn't helping you that much to where you are like, your cover call is not really going to be printing that quickly. Like the stock price is going to be coming down. all your capital appreciation is going away, and it's still going to take you another 6 months or so before you're like even halfway good on your covered call. So when I say you lose liquidity, dude, you lose liquidity. You lose optionality. You lose all of that stuff. You're legitimately long the stock. It's almost like you're going to go take a 2-year nap, and you're going to hope that things look good whenever you wake up, whenever you do this kind of thing. So I don't recommend doing this unless you're legitimately long the stock. Like, there's nothing that Tesla can do that's going to make you want to sell these shares within this time period. So if you're not long the stock, please don't do what I'm doing. This is not a good strategy for you. It's going to really, really hurt you emotionally and psychologically and probably financially.
And what is your response to the people saying, well, Tesla's going to be like 700 by 2027?
Awesome. I'll roll it again in a year, and I'll try to go from 340 to 400. Again, I'm long the stock. What does that really mean? It means that I have no intention of selling this stock until 2030 for me.
Yeah.
Only thing that could make me want to consider selling my Tesla shares is Elon Musk stepping down, because now the investment thesis changes for me. And about 2 years ago, I would have welcomed a new CEO. Now I'm not so sure. I just don't know that anybody can do that job like he can. And I'm sure there's other people that are already running Tesla. We just don't really know, right? I mean, because this dude can't possibly be doing everything. There's not enough hours in the day for it, right?
Yeah, he's with Trump all day, bro. He doesn't have
He's
time.
delegating. He's delegating. So, but he's 53 years old. So I'm thinking, dude, does he have another 7 years in him? I think the answer is yes. You know what I mean? 6 years, whatever it is. I would math this. He'd be less than 60, right? In 2030.
Yeah. So you just reduced your tax bill by $400K basically now for 20.
No, not 400K, but what I'd pay taxable gain, like capital gains. I went from, I think, 1.2 to like 700.
That's not bad. That's not bad at all.
Yeah, so I'm looking for another role. I'm actually looking for another role. I'm like, where in the hell? Then this is why I was eager to roll these covered calls on Hood. Normally I wouldn't do it, guys. I wouldn't do it because there's no risk of, oh, one of them just filled. Fantastic. There's no risk of early assignment. When I usually roll is because there's to protect against early assignment if I legitimately want to hold on to their shares. Right now I'm rolling on purpose with the purpose, and that's tax purposes.
Right.
And I have enough cash in the portfolio. We actually have another $3 million coming in January. So I'm going to be able to sell a bunch of cash secured puts. You know what I mean? So I don't have to like free up that much cash, if that makes sense.
Right.
Like I'm in a different situation.
Yeah. And again, just real quick disclaimer, none of this is tax advice. Please make sure to talk to your CFA or CPA to get an accurate description for yourself. But for TJ, it makes sense for him because he's sitting on 1.2 million in gains. If you could reduce that, it's not the worst idea for him.
Yeah. So everything got filled. So I had a roll filled for a credit and I had a roll filled for a debit. So now if we go over here to Hood, now the position feels a little bit different. And please allow me to explain a little bit. It's because now we have the shares that are owned at 21.17. They're currently trading for 39.27. And now if we go look at the covered calls, we have covered calls at 45. We have covered calls at 50. We've got covered calls at 40. And then we have long calls at 35 and 30. So we are officially qualified for all of these capital gains right now because of where the stock is trading. So we have we've officially gotten ahead of the stock for the time being. So that's a picture perfect roll from that situation. Now, am I predicting that I'm going to be in this exact same scenario a year and a half from now? I hope so, because then that means that the long calls are printing.
Right.
So I wanted to put myself in a position to where no matter what happens with Hood, I'm not going to be cheering against the stock, because I have put myself in those situations with Palantir. I put myself in those situations with Meta in the past. That's why I didn't put myself in that situation with SoFi. And I don't want to put myself in that situation with Robinhood. is I don't want to cheer against the stock.
Yeah, and it sucks when you're having to cheer against the stock. It's not fun.
Bro, I've done it. It's so counterintuitive. It's like, okay, what team am I on? Like, it's like, I mean, am I on the Palantir team or not on the Palantir team, right? Because right now, I would really love the damn stock to crash to $50, and I feel like a dick for saying that. But it would just be better for me and my goals, right? I'm like, everybody's selfish at the end of the day in the stock market.
Right.
We're all trying to make money.
Right.
So anyway, dude, I feel a lot better about it now because these covered calls are no longer causing any stress. These were never causing stress, but these over here, I feel like they're a lot more manageable now. And then now I can cheer for Robinhood. I'm like, dude, Robinhood wants to go to $100 a share right now, dude. It isn't going to hurt my feelings because these 30 and 35 long calls would be printing money. And, you know, I haven't sold any covered calls against some of these. And the other ones are manageable.
I have a question on the $45 covered call for January 17th. Let's say Robinhood's at 50. How would you navigate that? Is that an easy roll in that situation?
Yeah, or I could let the shares get called away and lock in a win and take some of the risk off the table. Because that would essentially fund all of my long calls.
Yeah.
And that'd be, you know, that wouldn't be the worst thing either. You know what I mean?
But the stock basically, if it's within 10% of the strike price, you can roll that for a credit relatively simply, is your point.
Oh yeah, dude. Yeah. I mean, and then I got to look at this. Is this initial roll or not? It is an initial roll. So I already know that my break even is 46.50. So optimal time to roll would be between 45 and 46.50. And I could easily roll to probably 50, 55, 2 or 3 months out for a credit.
Gotcha.
And because I still think that the crypto bull run is going to be going on pretty heavy at this time.
Right.
I mean, because it's only it's not even 30 days out. You know what I mean? Give or take.
Yeah.
So I feel good about it, dude. I feel good about it. Thank you so much for bringing Hood into the equation. I wanted to do it when Hood was like at $7 or $8, but I was too caught up in my own strategy. I'm like, it's not bring enough money through the door, so I can't do it.
Yeah.
The premiums were not that great. The option chain was not that great. And let's also just call a spade a spade. The story was good, not great. Now the story's gone from good to great. The numbers have gone from good to great. I mean, you have to give credit where credit is due. I mean, everybody like talks about this meteoric rise of Palantir. Well, dude, I mean, the story has always been great, but now the numbers got kind of good.
Yep.
You know, because it was like, you know, you can only pump a story for so long, admit. You know what I mean? Like at some point, you got to have these numbers to validate this shit. So Tesla goes to 500. Fantastic. I'm just going to keep rolling and rolling and rolling. That's actually the best case scenario. The worst case scenario for me, if Tesla goes down to like 200, because then now I'm pissed off because I'm back at break even on the shares. I'm not bringing any more money on the covered calls because my covered calls are so far out in the distance. Now, the one thing that I can do is I can roll it back in and I can go from a 340 to like a 240.
Right.
And try to make up for it that way. But that's more advanced techniques. And I don't like doing that. I like to roll out and up on a covered call. I don't like to roll down in it. It just doesn't suit my eye. You know what I mean?
Can we talk about SoFi and how you're navigating this position? They're up today because they got a new deal on the tech platform. So
they're really good for them. Yeah. Dude, I'm behind, guys. I'm like living life. This is holiday season, and it is what it is. So if I just stopped right there, TJ's a good investor. But of course, that's not what's going on here. We already know that I'm going to screw the pooch here, I'm sure. So we've got 7 strategies. We got cover calls at 18 for next Friday. I'm not going to touch those because I don't think that SoFi will get there. And then I've got covered calls at 15 for January of 26. And then I've got long calls, leaps at 7 and 5 for January of 2026. And then I've got the meat of the position for sell January 2026 at 20. And then I've got long calls, the leaps at 10 and 15 for January of 2026 and June of 2026, coinciding with the PSUs for Anthony Noto and the executives.
Basically, if some of these shares get called away on the covered call, you have the leaps where you would exercise to get them back. It's kind of
right.
wild.
So that is something that I'm considering probably over here. If I lose these 50,000 shares, because they're already in the money, right? This is a year from now. I kind of actually hope they get called away like June, July, August. That'd be great. Free up the money, and then I would just turn around and exercise these, and I would only be down 10,000 shares collectively. And then that would also change my mind, because these were supposed to be flips. These $10 calls were supposed to be flips, but if this thing were to go on a major moonshot, then I would consider exercising these as well, or at least a portion of them.
Yeah.
And to keep shoring up the position. But very unlikely that I'm going to do that, because I feel like the position is full. I'd actually, like, truth be told, Amit, if SoFi goes to $25, I'm probably even okay reducing this from $150,000 to $100,000. Why? I'm not bearish on SoFi, obviously. Look at the account. But because I do think that I can make more money in premiums, taking all of that money and making more static returns, selling cash secured puts with all that money, versus waiting on this story to continue to play out with SoFi. So I think if you give me all of that money, I close out the long calls on the 10s and the 15s, and you give me all of that money, and we compare how I do with that money versus owning the 50,000 shares on waiting on capital appreciation, I think that I'm going to outperform those 50,000 shares with all of that money plus the long call money.
Right. Right.
So that's just, I'd rather bet on me, because then it's like I feel like I have more control versus waiting for Galileo to go get a top 5 bank, or if that ever happens, or I don't know if all that shit happens, and it's just, I don't know. I don't know, but I like to get a lot more money to sell cash secured puts, because did you see this crazy trade that I got into recently?
I believe it's with the Michael Saylors of the world.
Yeah, so I tied up 850 grand. This is the kind of stuff I'm talking about. This is why I think of closing these long calls on SoFi on a daily basis now. So this is how many days is that, Amit? From 12/9 to 12/27, about 18 days.
Yeah, 18 days. Yeah.
So I tied up 850 grand for 18 days, brought in 125 grand through the door.
You can only do this on the volatility that is MicroStrategy.
And so I agreed to buy these shares at 85, and it's currently trading at 105. When I did it, it was at like 90, so it was a lot riskier, right? But now
this ecosystem that Saylors created with all these leverage ETFs, playing the volatility, there's a lot of premium to make. Obviously, there's a lot of risk, but if you understand how to navigate it, even if you didn't do an $85 strike, even if you did like a $55 strike, the premiums are still better than pretty much every other stock in the market.
Yeah, but what I did admit is I was like, well, let me cash grab it. Let me go after the risky play. If I get away with it, I'm going to offset a loss that I haven't talked about yet, because I did another tax harvest loss, because my capital, what Robinhood gives you, this little P&L thing. Yeah, it had exceeded 2 million at one point, and I'm like, I want to get that shit down to 1 million, because I got other stuff that I'd rather do with money versus giving it to Uncle Sam so he can go give it to another country or something. You know what I mean? I'm like, not interested in doing that. I'm sorry, I'm just not. I'm not that patriotic. So, what, if y'all are telling me that you don't try to reduce your taxes either, I'm going to call you out. You're a liar. You're a fucking liar. Like, we all try to pay the least amount of money to Uncle Sam because we feel like we're better at spending the money than he is. Yeah, and I don't even have an Uncle Sam. Why I got to give him so much money? So anyway, I'm just doing what's legally available to me. You know what I mean? So I got this 125K on 850. So I look at the amount of money I would have if I closed out the 10s and the 15s. Probably about 400,000. This is on SoFi, right?
Yeah.
And then if I let the 50,000 shares get called away at 15, I'm like, if I can keep doing this thing, because I think this trade's going to be there for the next 3 to 6 months, if not longer, at these levels. And then if I get away with it and this shit comes tumbling down to 85, now I'm doing all of it at 65, which is better for me. It's a better risk profile for me because it would be a more favorable entry point. I mean, dude, I just feel like I'm going to outperform what I think SoFi could give me on those shares and the rest of those leaps.
And if you do get assigned the shares, again, the covered call premiums are amazing as well. So, okay, so here's the question here, and let's ask this question, then let's get to the sheet. What is your philosophy as an option seller on trading these derivative ETFs, leverage products that bring in a lot more money, and you're like playing a game with the market, versus SoFi, PayPal, Palantir, and like the premiums aren't as good, but you're not playing that much of a game because at the end of the day, these are legit companies. How do you navigate which one is the better one to work with?
So it's about risk management, and it's about bankroll management. So I look at the totality of the bankroll and I'm like, dude, about 70% of the money is tied up in SoFi, PayPal, Palantir, Tesla, and Amazon and Riot. So I got like 6-7 companies, and that's like 70% of the portfolio. So
Right.
then I've got about 30% of the portfolio that I'm going to do these types of things because I'm trying to get oversized returns, right? But at the same time, if I crash and burn on this, does it hurt the account? Yes. Does it cripple the account? No.
Right.
So again, it's just bankroll management. You know, it's like I'm picking my spots. Like this is a spot, but I'm not going to go ham and do $5 million worth of cash secured puts because that could blow up the account.
So basically, if you're going to do these types of trades that are a lot more high risk but high reward, do it with less than 10% of the account, essentially, is your point.
Yeah, like I'm doing it probably more with like 25 to 30% of my capital, but I also have the stomach, the temperament, and the know-how to roll and stuff.
And you're more experienced, right? You understand.
Yeah, and I'm not, and I know people always like to say, well, all the experience, because I do that sometimes when I get on my motorcycle. But the reality is, if Granny's on the freaking phone and runs into me, I'm screwed on the bike. You know what I mean? So you got to still position yourself accordingly on the right side of the lane. Know your outs whenever you're defensive driving, right? When you're doing a motorcycle. Well, I'm defensive wheeling when I sell cash secured puts on stuff like this. And also, if you're going to do it on a leveraged ETF, you need to be pretty damn confident on the underlying itself, because it's going to mirror the underlying.
Right.
So if you're not on Michael Saylor's team, because I've been on Michael Saylor's team for a while, I didn't understand the MicroStrategy situation though, because I've been following this story. A lot of y'all don't know this dude had a come to Jesus moment during COVID. The company sitting with $500 million in cash, and he's like, "What am I going to do when I grow up?" Right? Like and then he was like, "Oh, Bitcoin. Well, let's see what Bitcoin is." And he rolls the dice on Bitcoin, and then he meets with the investment banker that introduces him to the world of convertible bonds and whatnot. And here we are. But a lot of people don't know the whole story. You know what I mean? Like I've seen probably 20 interviews with this freaking dude over the last couple of years, and what do y'all call it? Orange pill? Is that what Bitcoin is? Red pill, orange pill?
Orange pill, yeah.
Yeah, I mean, he'll orange pill you to death. It scares me how much I believe in Bitcoin when I listen to this guy. So I try not to listen to him too much here recently. So that's my thing. Again, not financial advice. You got to do what you got to do. Push your buttons. You gotta tend to your hamburger stand however it makes sense to you. But I'm in a rhythm in my hamburger stand, and it's printing more money than ever before. But I'm also okay taking ownership of a lot of these positions. You know what I mean? Like, it's like, well, I'll just play the covered calls and I'll do them real aggressive, even at the money, and I can get right back into cash if that's where I'm more comfortable.
Right.
But some people freak out, dude, at the prospects of owning shares.
That's really, it's really, if anyone's going to get into the option selling game, and we can bring the spreadsheet now and get some more information on it, you got to be ready for the emotions of missing out on some share appreciation and then maybe selling too early. And I think the best thing about you that is underrated about you is you have mental models to navigate the emotions because you've been through it, and you don't let what people say in the comments or anything like that get you off your mental models. Because as soon as that happens in this option selling game, you're done. Like, it's one thing to buy a stock, hold it for 20 years, and that's cool. It's another thing to say, I want 3% a month on my money. Yeah. And I want that cash today, not in 20 years. And to do that, you got to have a different mentality to navigate that game.
Absolutely. So what I want to do is I want to start with the overview page.
All right. So again, Amit at dailypalantir.com. If you want the email for this, watch this video many times. You can watch this in 2025 if you want to start working the sheet. TJ is going to navigate. How do you track a trade? How does it work? What do the Excel formulas look like? And then ultimately, how do you do bankroll management?
And I'm gonna send you a link to a video where the guy who created this sheet, we did a tutorial on this already.
Perfect.
It's with Troy Hutch. He's the guy that created this. And then I'll send you another video where Bill White talks about how to like add tickers to it and all that stuff, because we may be trading different stocks, right?
Perfect. Yep.
So all that technical stuff, I'm not your guy, but I know how to input the data. You know what I mean? And all that stuff. So, but we can get you all the people on here.
And real quick, TJ, do you input manually by yourself every single trade you do?
Yes.
So there's not a single trade where you kind of leave it and it has to be.
I'm on vacation, then I'll put it on the notepad, and then obviously it's going to be on your thing anyway, but I'll put it on the notepad just so that I feel like I don't fall that behind. And as soon as we get home, dude, like it's literally like the luggage is right outside my office, and I'm like, baby, I got to go on the computer and put all the trades in. It takes me like 5 minutes. And then I'm like, okay, cool. I'm good. I can rest easy. It's just become part of the experience for me because I want to know where I stand at all times.
So you would definitely say you're pretty obsessed with making sure every single penny is accounted for.
It's important because it's a business, because I have spreadsheets that are with other people's money, right? For the hedge fund and the family office.
Right.
So I could be a little more loosey-goosey with my personal account, but I can't be loosey-goosey with Kristen's dad. Say he'd be like, dude, I gave you Mijita, but I ain't gonna give you all this freaking money, and you're just gonna go out there and fuck it all off. No, he's not gonna do that. He likes me, not that much. So essentially here you have total deposit. So you just put in whatever that value is. Here you have brokerage cash. Here you have the share market value, the total invested capital. I don't exactly know what that means. And Bill White has explained it to me about 10 times. Open put collateral, that is just how much money we have committed to buying cash secured puts right now. And then here it gives you open call potential market value. So for those of y'all that are all like, oh my God, you're so underwater on all your covered calls, I'm like, dude, I'll go cry in my Ferrari, because I would have a Ferrari at this point. If all of the shares got called away from me, they'd be putting a cool 16 million into the account. I'll go wipe my tears with the profit. Open options premium, that is how much premium has come through the door with all of the open contracts, whether cash secured puts or covered calls. Here it tells me all the open puts that are in the money. And that number is a little skewed, and I'll tell you why in a second. It is not 77%. Open calls that are in the money is 48%. Net spread premium. So we have something here for if you want to do credit spreads, debit spreads. And then net call premiums. I've actually lost money on covered calls collectively, because whenever I buy leaps, it offsets money that I made from selling covered calls. So there's that, because I spent about $1 million on leaps this year. So it really cut into our profits. And then the net put premiums, so brought in 2.953 from day one in this portfolio in put premiums, cash secured put premiums. And here it gives you dividend income. I mean, the whole thing, dude, the whole thing. Then here it gives you a shares overview. So if you look at Amazon, is this big enough, Amit, or do I need to make it a little larger?
A little zoom in would help. A little zoom in.
Okay. A little better or no?
Yeah, that's good.
Okay. So Amazon's sitting on 5,500 shares. And then here I'm able to put the share goal. I don't have a share goal here for Amazon. I should, because it's supposed to be 7,500. So I'll put that on there. So it tells me where I'm at in relation to the goal. It tells me the current share price. It gives me the average, cost basis per share. Gives me the adjusted cost basis per share. So this is taking into account all of the premiums received via cash secured puts or covered calls. It tells me the portfolio share value, which is 14.6%, the market value of those shares, the invested capital, the unrealized gains or loss is 255. Unrealized gains or loss from a percentage perspective, the adjusted gains or loss, the adjusted gains from a percentage perspective, and then the realized gains or loss in total. And it does that for every single one of the stocks. And then on the summary page, it gives it to you in a different format. If you want to track, well, how much premium have you brought in through the door? So you have a total. So in 2023, I brought in net premiums of 571. In 2024, I brought in net premiums of 1.2 for a total of 1.7. And then it's like, okay, cool. Who's brought you in all that premium? So you can look at everything going down on Amazon. So Amazon was negative 3,000. Just stay on Amazon. Total premiums for this year were 64,000. So the net is 60,000. Then it tells me the shares are 5,500. The current share price gives you a lot of the same stuff that it gave you before. But this one, the reason I like the way that this one's presented to me, because it also gives you the open contracts and kind of how you stand with those. And then it gives you the bottom line. So I look at the bottom line, and my total return on Amazon is $239,000. And that's already accounting for the end of money covered call adjusted. So in other words, if there's a parentheses here, it tells me that I have a strike price here and I have a share price here. So this spreadsheet is giving everything to me in a nutshell.
So it's taking all the premiums and dividends and coming up with your actual cost. And that's important because if the stock goes below your adjusted cost basis, you need to know that I can still sell covered calls at a level that might be more aggressive, but it's not actually losing me money.
But this is also giving me a true value because you have a strike price and then you have a current share price. So it's already backing out the fact that you're not qualified for all of that capital appreciation. Whereas whenever you look at, it's when I say, well, we stopped here, I look real good, right? Like being up $1 million on Tesla, but then we're like, oh shit, I've got covered calls at 340. So you're not really up $1 million. You follow me?
Right.
But Robinhood's helping you out because like, okay, cool. We're going to say that you're up all this money on the shares, but if you look at your covered call, you're down all that money on the covered call. So the money that you see or the investing value that you see on Robinhood is accurate. That's called the net liquidation value in some brokerages.
Right.
I wish that Robinhood would start using that terminology. So here you can see all your winners and all your losers because I just look at the bottom line. So to me, it's always about row. These are rows, right? Columns is this way, rows is this way, I believe.
Yep.
So to me, it's all about row 79 for me. And I wish that he could have made it in row 69 because then we'd have been freaky with this thing. But it's row 79. To me, that's the only thing that I ever look at. And I look at Amazon made 239, lost 173. That was another tax harvest that I did a couple of days ago on Intel. So I'm on probation with Intel. I can't touch it for another 27 days. Made a cool 286 with CleanSpark, lost 129 with Enphase, made 386 with TSLL. So far, made 68,000 on Hood. You see how Hood has a parentheses because it's adjusting for some covered calls because we've lost money rolling covered calls.
Correct.
And we're also in the hole with leaps because we paid a lot of money for leaps.
That's good. So it's taking account the debit you pay, even though the leaps. So does it take into account the leaps being up into the total return? No. Okay. Got it.
No, that's a manual entry over here on the investor overview. So give you that too, but not everybody qualifies for this page because this page is proprietary, baby. But yes, I take into account for that is for sure. So there's that. Then you have so total return on Robinhood is 68,000. VITX, you see the 103. SoFi has been good for 559, but it's taken into account 821. That's covered call premiums, but then also the leaps are being extracted from that. You follow me?
Right.
And the fact that I'm also in the hole on some covered calls because we have covered calls at 15. SoFi is now at 16. And then PayPal, it's showing that we're negative big time because we're in the hole on some covered calls on PayPal, and I've also bought some leaps on PayPal.
Yeah, so it makes sense. But so the leaps probably cover out, but once you manually put in those leaps, then it'll adjust to positive.
Correct. So here it shows NEO at 160 no bueno. Tesla's a cool 824,000 to the good. Palantir is 458 to the good. The 116 just because I have covered calls at $45 here because we have covered calls at 340, and then I've just recently lost money on rolling those covered calls, right? Theoretically. Right. And then this is all the money I made on NVIDIA. Riot's full 1.2 million. The biggest winner in the portfolio so far. And CrowdStrike was good for 17. American Airlines was good for 25. And then other. These are stocks that I traded, but I don't trade them enough to have their own ticker. So those have been good for another $500,000. So that's how it all works. And now it's like, okay, you take a ticker, let's just say Robinhood, and now you're going to have a breakdown here. So the way that Troy
Okay,
said
so this is important because we're going through an actual ticker, and you're going to put some trades in as well.
right. So this is let me go a little bit. Is that a little bit better?
Yeah, that's good.
Okay. So here it's going to give you the rundown real quickly on the top, right? So you have your, I call this the macros and then the micros, right? So the macros is we have 10,000 shares. The current share price is $37.89. The cost basis is $21.17. The adjusted cost basis is $16.81. The reason that it is in green is because the adjusted cost basis is below the current share price, so you're good to go.
Right.
When it's in red, that means that you're not good to go, right? So here, the reason that the end of money call value is in red is because we haven't entered the trades to let the spreadsheet know that, hey, we have different strike prices now. Can you turn into green, please? You follow me?
Yep.
Like this thing's letting me know that there's some issue here. And another thing on the summary page, you will see red numbers here. If you own shares that you're not selling covered calls against, it's going to be like, hey, you got some squatters here. So he has this thing color coordinated for me as well. So I can just like glance here and I'm like, do I see any red? Do I see any red? No. Okay, cool. Oh, I do. NEO, I have some issues. Oh, no, that's the adjusted cost basis, right? So that means that I'm in the hole on NEO and I'm in the hole on Palantir because it hasn't adjusted for the covered calls that I lost a bunch of money on. So everything else is in the green. So this is my only problem spot right here. This one, obviously, it ended up being a net positive already. And here, NEO, I'm still in some trades because I bought some long calls and all this other stuff. So it's just taking into account all the transactions. So now back on Hood, this is where you guys can really understand the value of this thing. So it shows me the share count, the current share price, the cost basis, the adjusted cost basis. So all the important line items are there. But then here it's going to be like, okay, cool. How do you sit on your derivatives contracts? So that's where column N comes in. So there's open call contracts of 250. The open call premium was 18,600. And the money call value is 615. If there was any put contracts, it would be here. The put premium would be here. The in the money put value would be here. And any open spread contracts would be right here. And then here it also gives you a nice little overall snapshot on column Z. It tells you your cost basis is 211,000. The stock P&L is 167 to the good. Your call profit, you're negative 12,500 collectively, but you're up 56,000 on your put profit, the put premium profit. So your wheel P&L is positive 43,590. So this is just kind of letting me know whether or not the campaign's working as a whole.
Right.
So it gives you a lot of relevant information. So here on the left-hand side, you have your options. So this is how you input all of the data for your open options, and I'll walk y'all through these in a second. And then here you also have your stock information. When did I make all of these purchases? So on 8/16, bought 2,500 shares for 1974. So the money invested was 49,350. Can you guys see right there where I'm at?
Yep.
And it's still an open trade. So all of this is unrealized. On 8/16, bought an additional 2,500 shares for 1979. On 10/3, bought 2,500 shares for 22. And on 10/4, bought 2,500 shares for 22.68. So that is how you get to these numbers right here. So it's 10,000, and your cost basis is 21.17. Because if you take all of these shares right here and you add it all up and then divide it by the 10,000, you're going to get $21.17. So this thing's doing it all for you. And then now you sell cash secured put, you start entering the information, Amit. So it's like, okay, when did you open it? And this is a drop down menu. Whenever you start entering, like over here, if I do it here on the bottom, let's just say we're on row 45, right? Just to do like a brand new trade, and want to do a cash secured put. So we would just type it in and it's going to give you a drop down. So you're going to go 12/12. You're going to scroll down. You're going to be sell put. Let's just say the expiration date was 1/17/2024. So you're just going to type that in. And let's just say the strike price was 35. Let's just say it's 50 contracts. Let's just say you collected $1.50 and you hit enter, and it's going to auto-populate everything. It's going to credit with 7,500, and you're going to hit this status to open. And then now you're going to see how the open put contracts over here now are showing up at 50 put contracts. Open put premium is 7,500. But let's say I change this strike price to 45. See what happens over here on column N. So let's say I change the strike price to 45. It's going to give me a red number there because now I'm in the hole. You follow me?
Right.
And I'm in the hole because I'm obligated contractually to buy $225,000 worth of Robinhood at 45 bucks. So if I switch this to 40, it's going to lower this down to 200,000 because it's taking the amount of contracts times your share price, multiplying that times 100, and that's how you get the collateral.
Right.
Follow me so far? Pretty straightforward.
This is really, I mean, it'll take 5-10 minutes to put in the trades, but if you get every trade, the sheet should be able to give you all the data.
Once I can input a trade in like 45 seconds now. It took me a little while at first, but then now I go to the summary page. And I'm like, well, how's Hood looking now? Because I just entered into a trade. What's going on with that? And now it's going to tell me. That the put contracts, I got 50. I've got the open put premium of 7,500. But then I got in the money put value is now 200,000. Open put collateral is 200,000. So my in the money put percentage is 100%. Y'all see that right there?
Yep.
So now if I go back to Hood and I change that to say 35, you see how this number is going to go away. And if I go back to my summary page and we go back to it again, you're going to see that all of that went away now because now I'm out of the money. So this thing's just on top of it. You know what I mean? And these were a lot of calculations that I don't know how to do. I was just blessed with this guy, Troy Hutch. He was already using this thing. So he just kind of made it to where it gave me the information that I needed. And then Bill White just kept adding to it. And
would you be down if someone made a program that could manually enter all these trades for you as soon as you do them on Robinhood?
Yeah, we're actually already working on an app.
Okay. That makes sense.
We're already working on an app. So can I spoiler alert you guys or no?
Yeah, go ahead. Do it.
Okay. Yeah. So I have a website that I'm working on, and all of this stuff is going to be on there. All of my Wheeler seminars, either live or in person. Any live on YouTube or in person, all of it's all going to be there on. I'm going to give you all the fucking the site thing, because some of y'all will go daddy and cock block my ass and then make me pay more money for shit.
It'll be TJ Tube.
So anyway, and it's not what y'all think it is. That is not the website. So y'all go buy that one. It's not going to be that one because that one's too obvious. But it's all going to be on there. And then I want to have a program to where it's tied into your brokerage.
Right.
So whenever you do your trades on your brokerage, it's automatically getting filled out for you. So all of that's coming forward probably about a year away.
Okay.
Because it's complicated. And I got a lot of nerdy people on the job already. And there's another one of our favorite podcasters that reached out to me as well. And he was already working on one. He actually doesn't know that I've already got something cooking, but I'm hoping that he's going to be part of the deal.
I love it.
Because it is definitely something that I've been working towards for a while, because I just think that this thing is such a valuable tool because you got to know your numbers.
Yeah. No, and I appreciate you giving us the sheet for free, because the sheet itself is like tons of value just in manually updating it as well.
Yeah, but it's definitely Chris Patel's calling me. But anyway, and then we have this other page. This is more of exclusive stuff that you don't get on the sheet that we give away. But essentially, you get market value, cost, unrealized, cash secure put collateral, portfolio allocation, all your leaps, what you paid, what they're worth. you sold the calls, you know, how much premium you brought in through the door, how much you have to give back. Same thing with the puts, and then your cash. And then it'll give you a total market value for your portfolio. The reason it says margin used, this is also another critical thing. I'm not actually using margin, but that is how much cash secured put collateral I have sold that exceeds my brokerage cash.
Right.
So this thing's always giving you worst case scenarios. And then here it gives you total premiums collected versus buybacks. So it lets you know also like how you're kind of faring there. And here it gives you all the percentages. So the shares are 51%, the leaps are 10%, cover calls are negative, the puts, I don't buy any puts. The sell the puts, all that premium is 27%, the cash is 22%, and that's how you get to 100%. And then we have all these pie charts as well. Like what's giving you all the premium? So this is premium interest and dividend pie chart. So the other category is giving me 24%, right? It's brought in 22%. Palantir was negative because I lost money on the covered calls. Tesla's 5%, NEO's negative 5%, et cetera, et cetera, et cetera. And then it's like, okay, well, how do I stand now? What's the portfolio allocation? So we have that pie chart here as well. So cash is 25%, other is 19.6, right? 16%, Amazon 7%, SoFi is 10%, and so on and so forth. And this is taking into account shares plus open cash secured put collateral. Right. So it's like, well, how is CleanSpark a percentage, 1%, because I have 200 open cash secured puts on CleanSpark. That's why. So it's taken all of that into account as well. And then I have the premium interest dividend gold chart. So I had a gold chart of 2.5 million, I think, for the year, I believe. Oh, the premium interest and dividend gold chart net was 1.2. So we started off real good, and then shit went south, and then I picked it up, and it looks like I've just recently matched the goal right now. I didn't even know that. It's the first time I look at this in a while. So the goal is 1.2, and we're at 1.21710. And then here's trading tools. This shit is really, really cool too. So if you want to calculate, okay, what's my extrinsic value or intrinsic value? We have a calculator here. And then it's like, okay, what's the rate of return calculator when you're selling options? So you see a trade that you're eyeballing, you're like, is the juice worth the squeeze? You can type in all of this information on here, and it's automatically going to give you a number. And then you can decide whether or not that makes sense. So let's just say we're going to do 117.24.
Oh, this is awesome. This is in the sheet itself. You can just play it.
So let's just say the options price is, I don't know, $3. I'm just putting numbers here. Let's just say it's a $30 strike price. Number of contracts 200. So you see how it's telling me that there's not, the rate of return is 10%. The juice really isn't worth the squeeze there for me. So I would be looking for something different. I feel like maybe I'm doing something a little bit wrong here because I don't ever use this tool, to be honest with you. But because I feel like this number is a little off. So I'd have to get Bill White on. I'm going to have him watch this segment so that he can tell me. I think I know what it is. 117.25.
Oh, yeah.
There we go. Okay, that makes more sense. Okay, so let's say we entered into this trade, this imaginary trade, $30 strike. They're going to pay us $3 in premiums, 200 contracts. So we're agreeing to buy 20,000 shares, hold the contracts for 36 days. The options collateral is 600,000, but it's giving us a $60,000 credit. That's a rate of return of 10%. Annualized is 101%.
That's nothing. I could get 50%. I could get 50%.
Now let's say it's MicroStrategy.
That's what I'm saying. I could get some. I can get some MSTX and get 50%.
$90, and you're gonna make this bigger now because now it's bigger numbers. And let's just say they're gonna pay you like, I don't know, $12. That starts looking more like MicroStrategy.
That starts looking like MSTX. Look at that.
So let's do the one, like, this is a fun little tool. Like, I didn't even know that we had it. So I knew we had it, but I don't use it. So let's just look at this one trade, this trade here. So let's input that data here, and then I'm going to show you how to input the data on the hood trade and whatnot, because I got to erase that one hood that we did. So it was 12.9 to 12.27. You can help me remember this, Amit.
Yeah.
12.9, 12.27, 85 strike, and the premium was 12.50.
Yep.
So can you help me out with that? Because I'm going to go back and I'm going to forget all of it. Okay.
Okay.
So we're going to go to trading tools. So it was
12.20. 12.20.
12.20. The options price was like 12 something, right?
12.50. Strike was 85. And you had, I think,
it was 100 contracts.
It was 100. Okay.
That can't be right. Oh, it's because we didn't enter into, because this is assuming that you're doing it today. I did this trade 3 days ago.
Okay. Gotcha.
You follow me? So there's that as well. So yeah, it's pretty crazy, right?
Well, I am looking at my notifications. I think there's like 100 emails, so I've got some emailing to do, but I will send all of this out by tonight.
Yeah, hopefully y'all got value out of that. Now what I need to do though is let's spend, if we can. Are we still good on time or no?
Oh, we're good.
Okay, so what I would like to do now is just walk y'all through. Okay, we did some trades earlier, right? So on hood, we roll. First of all, we bought leap. So let's put that one in. So 12.12, we sold a call. We bought a call, but we don't have a thing for buy the call here. So you do sell a call, and it was for 115.27.
Yeah.
And it was a 35 strike, or
yeah.
And it was 50 contracts. And then I paid a premium. So now I got to pull up my phone. I don't know what my phone is. Oh, here we go.
Yeah, I think we paid like $14.80 or something.
Yeah, I don't remember, dude. It'll tell me here in a second. So
while he's doing that, guys, stocks right here, 39.23 on hood. We're up 3.7%. Palantir 73.40. Bitcoin 101. Tesla going down a little bit, 422. Riot's up 10%, 1297. Open Doors down 5%. Celsius up 4%. Google's down a little bit. SoFi back below 16. So you got some sellers right here on SoFi.
So essentially here we have 12.12. We sold the call. We really bought a call. But the way you turn it into a sell, the way you do that is you just do a negative number on the premium. So the expiration date is 115. It was a 35 strike. It was 50 contracts, paid $16.10. So 80,500 open. And then what I do is I just color coded to let me know that it's a leap. Like that's just, I just keep it simple for me.
Yeah.
And then eventually we'll make a modification or an iteration where we can just buy leaps. You know what I mean? But this is still, it's a work in progress, if you will. But on the finished product, that's the way that will be. So that's how you do that. And then now let's just say you already have an open covered call. So remember we had the open covered calls at 32 and at 29. So these rows right here. So I already opened them. So now to close them, you go to the other side of the equation. So we're going to take one at a time. So the $29 calls. So I closed them today. So then now I just got to open it up and see how much did I pay for them. So I'm going to look for that here on the $29 covered call. No, that one's not it. It's this one right here. Okay, so what I want to do is so that you guys can really follow what I'm doing is I'm going to show it on the actual where the hell is hood? Here we go. So you guys can see where I'm getting the information. So you go here and you see the rolls right here. So you see the hood roll here for, so this is where we bought the leaps, right? For 80,500. So y'all are going to see that number matches what I just showed y'all on the spreadsheet, right?
Yeah.
The 80,500. And then here we rolled two covered calls. So this one here, we rolled the 32 to the 50. And then in this other one here, we rolled the 29 to the 40. Same expiration dates, 1/16/2026. And here it tells you what we paid to close and what we sold to open. So this is where I get all of the information to put into the tracker. So then I go back to the tracker and I'm like, I got to go find that. I got to go find that row. So it's right here. So this is, I'm dealing with the $29 covered call. So now I'm going to go to my, I'm going to go over here real quickly and get the information. So on the $29 covered call, it actually cost me money. So I closed for $11.50 and then I sold the new ones for $11.25. So you're going to just type in $11.50 and you're going to see how I lost $37,000 on that covered call. Do you guys see that?
Yep.
So now I'm going to hit rolled over here. So I'll know what happened to that contract. And then I'm immediately going to go over here and I'm going to type in a brand new covered call. And it's for 116.26, I believe. And it was for a 30, what was the strike price?
No, 50. That's 50.
40. It's 40 for 11.25. So it's 40, and then it's 50 contracts, and then I got 11.25. Oh, that's weird. That's weird. Hold on. So we're going to go over here because there's something wrong with that cell because I should have gotten a credit for that. So call, so it's 116.26. It's 40 was the new strike price, 50 contracts, and I got 11.25. There we go. So then now my adjusted cost basis just came back down again because whenever I put in that premium, so then now this one's going to go to open. So then now I'm going to have the right amount of cover call contracts again. Because if y'all like really studying what's going on up here, anytime I make some moves over there, it's going to tell me that I did something. So then the other one I got to do now is the 32s. So I'm going to go 12, 12, and then now I got to figure out, okay, how much did I pay for those?
By the way, put in the chat if you're like if you're a Excel person, if you use Excel daily and you like know the formulas and stuff.
810, 825. So here
I took one class on Excel in college, bro, and ever since then I haven't really.
So there's 810. So then I'm gonna roll here, and then I'm gonna do it again here. 1212 sell call. The expiration is 116.26.
Okay, everyone is saying yes. How many of you guys like using it then? How many of you actually enjoy using Excel? I feel like most people should enjoy it if they're using it daily because you just become so smart at navigating it. And there's nothing better than Excel that I've seen.
810, 825. So this, and then this one was for 32 to 50. So then I go 50, and then it's 50 contracts. And it's 825, and then I hit open, and then now it's going to say that I have 300 open contracts again, so I know that everything's good. And then I'm going to hit refresher, and the reason that it shows the in the money call value right here at 485 is because I've also bought leaps, and those leaps are in the money technically, right? Because I bought them at 30 and 35, I think. Yeah, 30 and 35. So that's a tweak that we need to try to figure out, because I want that to be a separate cell for letting me know that that is not against my covered calls. That's because of the leaps. You follow?
Right. Correct.
That's something that we got like 4 people trying to figure it out. It's not as easy as you think. So there's that. Or another thing would simply be to have a whole separate page for leaps. That's an option that we've been throwing around, and then that wouldn't be an issue.
Can we look at adding a new ticker? What you would have to do?
Yeah. So I'm not your guy for that, but it's over here. You click on this. No, I'm just not. So you click on that house right there. And then you do all that, but that is going to be on the video that I linked for you guys.
Okay, perfect.
Yeah, he walks. No, and it's not that I'm not the guy, because I do know how to do it. The issue is I don't know for the life of me how to right click, because you need to be able to right click. and I can't right click on this stupid fucking mouse right here.
But when people get the sheet, like on Open Door, if they replace that with Amazon, they could just type in a new ticker as well, right?
Yes, but there's like 3 steps because you're getting information, right? You're getting ticker information. So
But if you just update the ticker, the formula updates the price of the stock.
Yeah, if you do it in the right spot. Yeah.
Got it.
If you do it on the right spot. So again, I just don't want to get lost in the sauce because this is not who TJ the Wheel Deal is. Like, I'm giving y'all the most that I can. Like, I know how to drive the car, but now you're asking me how the fucking engine works, bro. I don't know. You know how your Tesla works? No, you plug the shit in. You follow me? I'm that guy.
It's true. I just plug it in and I hope it works. That's it.
I am that guy. So I mean, I stay in my lane. You know, I did just straight up. Whenever I have to add a new ticker, what I do is I email this shit to Bill White, and he does it for me and sends it right back, and we're good to go. And then I have a real hard time trying to figure out how to get it back to read to my Microsoft One or whatever the hell it's called. Like, he has to walk me through all that shit because I get frustrated very quickly.
But even that, even how you've navigated for the past hour, you know what you're doing on this sheet for the stuff you need to do every day, which is what matters.
Yeah, but I have screwed it up a few times, dude, and then Bill will fucking be like, no, just send it over, and he fucking makes fun of me and shit, you know. It's all good. But dude, it does give you a lot of pertinent information, and this is essentially what I want to convey to you guys is, if you want to treat it like a business, you need to have certain tools. And my plea to Robinhood is, I feel like they could give you all of this information if they wanted to.
Yeah.
So my question is, why the fuck don't they? Because nobody knows my numbers better than my brokerage. And if Robinhood wants to really, really be taken seriously, or any of these other brokerages for that matter, like, help us out and do us a solid and tell us what our adjusted cost basis is. Tell us, hey, what you're about to do is going to potentially create a wash sale, because they know all of those information. And that's why I am not going to sit here and pound the table on Robinhood and all these other brokerages, because they're not really your friend. Like, you got to look at who greases their wheels. You know what I mean? Like, there's a lot of tools that they could give to us that can make us better at ours. Like, just give us the information so that we're not having to go back and be like, oh shit, when did I sell Enphase again? Because I recently sold Enphase for a tax harvest and I want to get back in, but now I got to go sit there and figure out, am I going to do a wash sell situation or not? When they could just be like, hey, the trade that you're about to enter into is going to create this tax ramification, because they know that information, bro.
I think the thing is, those features will be really important for option sellers. And the question for them is, how many option sellers do they have?
Pay $20 a month. Give me the information that you fucking already have, but I got to go run a fucking report and wait a day or two for it sometimes.
Yeah. I think if they focus on this segment of option sellers, because it's more and more people like you are on Hood doing this stuff, it would benefit them for sure.
Yeah.
It would.
Yeah, bro. Like, this guy's saying Fidelity gives wash sell warnings, and I think also factors in cost basis.
Yeah. See, Robinhood they don't give you your adjusted cost basis. They don't do that.
I'm just saying, bro, like, there's certain things that we're trying to get on the wheel tracker, but I feel like by the time I finally get it all kicked off and have invested thousands of dollars to try to get this done, I feel like the Robinhood could have given this shit to us all along if they wanted to. So my question to your boy is, why don't you want to?
I mean, we just got P&Ls, right? Like, we haven't had that for years.
Bro, but that shit's been, I mean, fucking even Webull gives you that shit, bro.
Dude, I don't even have the feature yet. I'm still waiting for the feature. I don't have it yet. I'm like, damn it, bro. I want to see my P&L. Like, I want to. Like... So yeah,
this guy is showing me how to do right click and stuff.
Anyway,
love me some Robinhood. You guys know how I feel about the company and the stock and all that stuff. But I'm just saying, the brokerage is as beautiful as the interface is. The experience is amazing. I love it. We have millions and millions and millions of dollars on this thing. Dude, I control over 9 figures now on Robinhood. But, bro, give us some of this information that I know you guys have.
Yeah.
I know they have it. They got it. Dude, if they don't have it, who does? I'm just saying, like, we're doing everything on the platform. You know what I mean? And then also, one other plea to your boy. Dude, why is it so hard to get somebody on the phone?
Yeah, that's something that I can't defend that. They're big enough to the point where they got to have customer service reps. The problem is if they do that, this is the thing. This is what I think they're thinking. If they say we're going to take your phone call 24/7 like Schwab and Fidelity, then they got to live up to that. And people will get on the phone for the dumbest
Dude,
stuff.
I'm saying, dude, just give it to me during market hours. I can't really do much after hours anyway.
No, but they're going to have to commit to it because everyone will take advantage of the phone call if you give it to them. And that's why I think they've been staying away from it. But I think it's time to do it because if you get these many people bringing over big money to the platform, it's time. So I agree.
Yeah.
I agree.
Anyway.
All right, TJ.
Well,
This
guys,
was awesome.
Appreciate you guys. I did have my first CEO on yesterday, Amit. I've spent several hours with him already, so I was a lot more comfortable. Maybe if I didn't already know him, it might have felt a little bit different or differently, whatever the word is. But dude, I feel like, I got to give it up to Jason Les, bro. We ask him the questions and he freaking answers them, dude. And that's just the way that it is.
There he is. First CEO on the channel. It's not bad.
Yeah, so it's a Riot Weekly that we're starting. Tevis and I is helping me, Bill White in Dallas. And we're going to really dig into that company along with Marathon and Clean Spark, because those are the three miners that I'm interested in.
Right.
And I feel like they have the most promise. I know Iron and all that. That's all great. But I'm just saying, you got to pick some horses, right? It's a win, play, show. That's how it is when you bet on horse racing. And I'm betting on one of these three horses is going to win. The other one's going to place. The other one's going to show. And I think that, Core already went in their direction with the Core Weave thing. Now, obviously, right, I got to dig into this shit. I really don't know what's going on. I'm not an insider with the company, you know what I mean? So I don't know what's going on. I think the market likes it. It is what it is.
Well, you were at 20,000 followers last week. Now you're at 20.5. So obviously people are finding something valuable from the content you're putting out there. TJ's Twitter, guys, right there in the chat. You can follow him there. I will get to all the emails by tonight. I'm going to be on a bus to DC tonight, so I'll be sending plenty of emails on that bus, and you guys will have the wheel tracker pretty soon.
Awesome.
And then you can go back to this video in the future if you need help.
For sure. And then I'm going to send you the link to the video where Troy Hutch covers it, as well as Bill does a 1-minute video on how to add a ticker.
Yeah, you can send me that tonight, and I'll actually send people the sheet with those two videos.
Yeah,
so.
I'll text it to you. All
right, perfect.
All right, man. Appreciate it. You want to do your little the little, what do you call it?
Word of the day. Yeah, let's do word of the day. Okay, I would say this is definitely describing you more than anyone. Brusque. Blunt. TJ will give it to you blunt. He is not gonna hold back on how he feels. He apologized later for being brusque, blaming his bad mood on a stressful day. The waiter's brusque manner made their anniversary dinner feel rushed. TJ, if you tell him, oh, he's missing out on some capital appreciation, he'll be brusque with you and say he wants to see those receipts from when you.
Yeah, I'm learning on that curse. I'm not learning. I'm working on not cursing so much. I turned 50 on February the 5th.
Oh, that's great.
And I'm on record that I will have said my less fuck when I turn 50.
Well, why 50 as the reason?
I just feel like at some point you just can't do it anymore. And it's and I don't even lie. Don't get me wrong, if I fucking fall over on the bike or something, it's coming out of me. But I'm just saying, it's just not going to be part of my vernacular anymore because I feel like one day I'm going to become a granddad, right? Jeremiah's going to come to me and be like, hey, I got Sid Lolly pregnant, Pop, and we're married. Hopefully that happens first. And I just feel like grandpa can't throw the F-bomb anymore, but it was a good run. We had a real good run. It's a very useful word. I feel like it is just it has a wide array of uses. But I'm going to transfer it all over to shit because shit is a term of endearment. I mean, admit you're the shit. It's a term of measurement. I mean, how much does it weigh? A shitload. I mean, how much money did you make? A shitload. So I'm going to go from fuck to shit. And I'm gonna make shit my shit, for the next 40, 50 years, however much life God grants me.
Yeah. Well, I mean, look, it is what it is, and I think when you're brusque with people, even if it requires some profanity, you are doing it in a way that actually gets people to understand the point. Also, if you're turning 50 in February, so I think Kris was calling you because he wants to find a chance to meet up in Texas. I'm doing this kind of, I guess we're calling it world tour. No, but he's calling you because he wants to meet. Me and him want to go meet you in Texas. But I'm doing this kind of like meetup thing every month next year. Okay. So I think maybe February we'll come to Texas.
Well, I'm going to be in New York in February. Isn't he closer to New York?
Why? Why are you going to New York?
I'm celebrating my 50th in New York.
Oh, that's perfect. Yeah, I will tell Kris to come to New York instead. That's easier.
Yeah,
we'll go to Texas later in the year.
Yeah, I'm going to go. We're going to be there for like 3 or 4 days. I think from I don't know. I don't even know when my birthday is. Mine's on the 5th, but I don't know what day it is. But I know that we come back that Friday, so we're going to be there like that whole week. And I think my birthday is like midweek or something like that.
And what are you doing for the birthday? Just like a restaurant or?
I don't know, dude. Kristen takes over my birthday. If it's me, bro, we're gonna go freaking Brooklyn and go eat some Grimaldi's, and I'm chilling. You know what I'm saying?
What's Grimaldi's? Is that what's Grimaldi's? Is that Italian?
It's just a brick oven pizza. They were founded in Brooklyn. They're everywhere now. But I just, it's my favorite pizza. I could be cool with Grace Papaya hot dogs, dude. I'm that guy. I'm easy going. I'm easy going. You know, I can treat all y'all for, $30 at Grace Papaya. But I mean, I'll splurge and go 100 at Grimaldi's. I just think it's the best pizza. They had this spicy chicken, bro. How do you say it? Dude, give us an oh my goodness for the road. Dude,
my goodness,
bro, this spicy chicken sausage, dude. You throw a little spinach on there. Oh my goodness, dude. I mean, I'm just like, they say in Hawaii, because we were over there for 5-6 days for the honeymoon, it's bomb to the mouth, dude. Like, it is just, my God.
Well, I'll meet you. I'll tell Kristen. We'll meet you in New York then for your birthday. That'll be awesome.
Dude, let's do it. I just love me some Grimaldi's pizza. I do love food in general, but I've been cutting down because I'm on a cut cycle right now.
Are you a medium well guy or medium rare guy on the steak?
Dude, I'm more like medium well done. I think it's called medium plus.
Okay, so you're like me. You like it.
I want my meat dead, bro. I want my cow dead.
Why do I get so much shit then for not liking medium rare? I don't get it.
Dude, my wife, medium well to medium plus.
That's me. Yeah.
I like. I even order well done because they won't really do it well done anyway. But I don't like too much of that pinkish red shit on there. Dude.
Me either.
Nobody's gonna convince me that shit ain't blood, yo.
They can say hemoglobin, where the fuck they want to call it. It's blood, bro. It's blood,
bro. I'm sorry, dude. That is just not my thing. I'm not a vampire.
Chamu does barbecues and stuff, so he knows about steaks. I don't get how he likes medium rare. I don't get it.
No, bro. No, dude. That's just no. It's gross, dude. It's gross. No. They say that's where it has all the taste, all the nutrients, and all that. I could just pop a vitamin after if I'm really lacking that. Like, I want my food cooked. Whenever I do hamburger patties, I want them looking like hockey sticks, like hockey pucks. Like, I want it done, bro. Nice and crispy. Especially, maybe I grew up with chicken my whole life, and that's like, you don't want to play with chicken.
Dude, I had medium well for the first time in California this year, and I was like, I don't know what I've been doing with medium rare. That's ridiculous. Makes sense. Okay, look, ketchup on steak is not bad either, bro. I don't know why people don't like ketchup on steak. That's not a bad combination.
Dude, I'm simple. Dude, I do a little A1 sauce, a little bit, not too much. If the steak needs sauce, it's probably not that great of a steak.
Yeah, I agree. I agree on that.
But anyway, I don't eat steak very often, but when I do, it tends to be at those Smith and Walensky type places.
Right.
And they know how to make it over there. Anyway, man, I got to go. I appreciate y'all. Hopefully, y'all got a little bit of value out of today's episode. I guess it'll probably be a couple weeks before we're able to come on again.
Yeah, probably like a week or two. And
careful. Yeah, because I'm in La Jolla next week.
So it'll be. We might do one before the end of the year. If not, this will be our last one for the year. It's been a fun series, bro. We started this in March, I think, or maybe February.
January.
We started in January, but March is when I think we
really kicked it off. Yeah.
And we said, let's do a public kind of portfolio thing. And I think at the beginning it was like 50 grand or 100 grand. And now it's like $1 million, right? So
yeah,
it's been fun. It's been super cool. TJ's Twitter in the chat. And we'll see you guys either in the new year or maybe once before the end of the year.
Yeah, for sure. Appreciate you guys. Take care.
Bye, TJ. Thank you. Bye. All right, that is it. That says, do you sit in the high chair? Bro, ketchup on steak is not bad. Medium well is not bad. You guys just buy into the propaganda of medium rare, and I don't get it. It's nice to see no blood on the steak. I don't care if it's not blood. It's nice to see it not pink, regular steak. It's nice to see that. Okay, I think we had Dan Ives on CNBC. Let's end it out with his segment, and then we will be done for the day. Let me see if I can pull that segment up. And that's it, folks. Then we're done for today. I'll be back on the market close. We have Broadcom and we have Costco after the bell. After Broadcom and Costco, that's it. I'll be live tomorrow in the market open. Won't be able to do the market close tomorrow. Again, we'll be at the Army Navy game. We'll be visiting Palantir's DC offices. I'll have a couple people that some of you guys know in the Palantir community. They'll be on the market open with me tomorrow. So I'll be on a bus today headed to DC, but we will do the market close. I purposely scheduled. Oh, Jose will join today as well. Jose will join today as well for Broadcom. I purposely scheduled the bus ride 2 hours after the market close. So I'm getting there super late in DC, but I didn't want to miss the market close. So bus is after the market close, and we'll be able to do the show. All right, here's Dan Ives today, this morning.
As our viewers know, has been a bull and correct to have been so for the last 2 years when it comes to the tech trade, forecasting on our show in January that the NASDAQ would hit 20,000 this year. He's Dan Ives, Wedbush Securities Analyst, and now he joins us for his 2025 predictions. You know, 2 years in a row is good to be right, Dan. You're bound to be wrong one of these days, but I don't know when that'll be.
Yeah, look, I mean, I think as me and you have talked and we've talked on the show, this is just the beginning. I mean, I think this is ultimately going to be another 2-3 year bull market for tech because it's a fourth industrial revolution that's playing out in front of us. And that's going to be big tech and the multiplier. And I think it's only 10 p.m. in the AI party that goes to 4 a.m.
Yeah. Have you gotten any later in the party, or are we still? It's always kind of early, isn't it? I mean, it's been a year now, but we're still at 10 p.m. Oh, we started at 9. Okay.
Started at 9. Now we're 10 p.m. And look, we think tech stocks are up another 25% over the next year. And I think NASDAQ 25,000 a year from now is something that we're going to start talking about going into the end of next year, early 26.
Yeah, so much of this, there it is, the last line there, so much of this depending on, the numbers are staggering. We talk about them all the time, quarter to quarter. But you think AI CapEx is going to exceed $1 trillion. Why? In 2025, I should say. Yeah, why? Yeah,
it's everything we're seeing. Look, that's why we travel the globe, right? It's trying to understand where the AI CapEx is and what's happening in the market. I think Street's underestimating AI CapEx potential by 30 to 40%. And I think the biggest thing here is the multiplier. For every dollar spent on an NVIDIA chip, there's an 8 to 10 multiplier across the rest of tech. That's why you have names like the Messi of AI, Palantir. You have other use cases that are now starting to be in software, Salesforce, front and center. And this is just the beginning. It's get the popcorn out because the rest of tech now sees the benefit of the AI revolution.
Although, Dan, people are still now this morning looking at Adobe's guide, on the back of it, Oracle's guide. Is there going to be some kind of pause or chance to breathe, you think, in early 25?
Yeah, Carl, I think there's definitely chances to breathe. But when I look at sell-offs in Oracle, sell-offs in Adobe, I think you buy these dips because it's where I see this going over the next 12, 18, 24 months. Because how we view this all playing out is the use cases are now front and center. And the street will sell these off near term, just like we've seen other names sold off over the last year, whether it was Palantir, Tesla, Apple, and others. But now that AI revolution, it's coming, not just to the enterprise, but coming to the consumer. And that's through Cupertino, which is why I think Apple's going to be the first $4 trillion market cap, potentially by the end of this year or early 2025.
Do you buy Meta stock on the fact that Zuckerberg, as we just heard from President-elect Trump this morning, went to visit him, and Mar-a-Lago is giving money to the inaugural campaign? Bezos, he said, is going next week. We know Elon Musk, and it's worked for Tesla. Are these fundamental reasons to buy the stock?
Look, I think there's been early Christmas present, early holiday present when Khan's out at the FTC. I think it changes the dynamics. You can have massive deal making. We think deal making is going to be at more than 50%. in tech. And I think who's the stronger going to get stronger. That's going to benefit Meta. It's going to benefit Alphabet, clearly Amazon. And then the one that benefits the most is, I think, Musk and Tesla. It's our view at the end of 2025, we're likely staring what could be a $2 trillion market cap for Tesla on the autonomous vision and deregulation in the Beltway.
Dan, as always, appreciate it. Thank you.
Thank you.
All right, there you go, folks. There is Mr. Dan Ives on tech. We covered his 10 things he's looking for yesterday. We covered it this morning as well. But look, at the end of the day, based on what Trump said today, based on kind of the market sentiment around growth over the next 4 years, it's not like there won't be ups or downs, but it does look like there will be more growth than not. And then it's just up to companies for making sure they can actually show that earnings growth over the next few years. All right. That's it. That's it for me. I'll be back market close in a couple hours. This was a long one, almost 4 hours today, 3 hours, 39 minutes, but it was fun. We'll be back market close. Costco and Broadcom, that's the big one. Jose will join to discuss Broadcom. And then that'll be it for today. And we'll keep going from there. Yes, Palantir is sponsoring, I think, the Army Navy game. They're involved in that in some way, so that's why I'm going. And I'll be checking out their DC office, so we'll definitely get some pictures for you guys from the DC. I've been to the New York one. I've been to the California one. Never been to the DC one. So we'll be checking that out tomorrow as well. All right. Thank you, everybody. We'll be back in 3 hours to analyze the markets. And we got Broadcom and Costco after the bell. All right. Bye, everyone. Have a good one. See you guys in a bit.